following presentation is for educational purposes only. All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader LLC. Trading futures involve substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.
Good morning, everybody. Welcome to NinjaTrader Live. My name is Jim Cagnina. It's June 5th, 2024. Happy Wednesday. We have an awful lot of stuff to talk about. Joining me live, my partner from Long Island, New York, the incomparable Tom Schneider, CMT. Tom, good morning.
Good morning, Jim. How you doing?
Pretty good. Feel pretty good today. Another beautiful day down here on the island.
Yeah, we've got something like that going here. Everybody got out of the house okay. I say okay. My wife got up a little late. She gets up really early, by the way, to go into the city.
Yeah.
And then daughter had a doctor's appointment. Son had school. Other son had work. Father-in-law went to church. So everybody was out of the house when I could sit down and prepare for the day.
Wow.
Just the way I like it.
Yeah, it came out good. Yeah, I have the opposite problem. No one leaves the house in the morning. As a matter of fact, I have this old German wire hair pointer. She's about 13 years old. She sleeps all the time. You know, we'll go on walks, and then she'll have her moments of excitement when she's hungry. But other than that, it's not a bad dog's life.
Yeah, how about it?
Yeah. So in any event, well, we have a lot of stuff to talk about today. The markets are on the move, a lot of green across the board. Let's talk about the economic releases that we are up against today.
Sure. So this morning, as we usually do on Wednesday morning, 7 a.m. MBA mortgage applications. Nice report, I think. 30-year mortgage ticked down a little bit. Actually, I'm sorry, ticked up a little bit. 7.07% versus last week's 7.05%. So not much of a change there. The refinance index was down 6.8% versus 13.6% the previous week. Purchase index was down 4.4% versus 1.1%. And then the index itself, the applications down 5.2% versus last week's 5.7. So this to me seems seasonal. I don't know when everything trades like that. But that was 7 a.m. I don't think it moved the markets that much. ADP came out with the employment report. Private payrolls month over month changed 152,000, forecast to be 173,000 increase. Previous that 173 number was revised down from 188 as originally reported. So not really trending in the right way, but still increasing. We have, I think, a couple of reports that might be market movers. We have the PMI composite flash at 9:45, ISM services at 10 a.m. We have the EIA petroleum status report at 10:30. So if you're trading crude or any other energy, you might take a look at that. And then I think we're free and clear, Jim.
Yeah, I think you're right. You know, the two economic releases that came out this morning were kind of interesting. That, you know, the MBA mortgage application report, we're still at a 7 handle on a 30-year conventional, right? And that's it's been sticky in that 7 handle right now at a 7.07. I think you're right about the seasonality. I think we're going to start seeing some changes though, because a lot of families like to move and make sure that they're moved in before the end of August because they want to get their kids into whatever school district that they want to live in. So I think we might see a little bit of movement because of that seasonally, but I don't know. So it's just it was a pretty negative report all in all.
Well, and I think Stephen Jonathan said it yesterday, the zombie mortgages, right? People want to move, but maybe they don't want to switch from a 2.85 or a 3% mortgage to a
Yeah.
7% when they refinance. So that might be keeping people in place as well.
Oh, 100%. I mean, it's a hard pill to swallow for sure, especially once you get to a certain age and you don't, who needs a bigger mortgage, right?
Right.
Especially if your house is paid off or you have a tiny mortgage. So I agree with that 100%. Now, the big deal, though, was the ADP employment report. And um, this is private employment, right? This doesn't look at government employment or anything like that. A lot of folks who have jobs, their service, the payroll service is ADP, so they have a great database. But this is a weak report off of arguably a weak JOLTS report. And so if you combine it together, the idea is, hey, we have some bad news coming in here, leaking in, slowly coming in, trend wise for sure. Then look at what happened to the equity markets. They rallied in support of that.
Yeah, I think
So
it's what you
yeah,
were saying before. Bad news is good news.
yeah. I mean, that could be it. Things are slowing down. I do have a graph of that ADP. I'll just pop it up really fast here. And I don't know that it tells us anything other than if you kind of look at this kind of, I don't know, linear regression or extension, if you will, we're back on track post COVID. So that's a good thing. But this report was about expectations, and as you mentioned, the last report of 192,000 was revised downward again. No surprise there, 188,000. So back on track, but didn't quite meet expectations. Oh, let's see what the major stock index futures did based on that news, Tom. Here's the E-mini S&P catching a bid up 22.
Yeah, and keeping above your moving average, right? So that moving average that you have, that 8-period moving average, exponential moving average, nice launching pad almost after a couple of two doji like but bullish supporting wicks. Follow through today with that jobs report. Now we're targeting, I think, that previous high that we saw back on the 23rd of May.
Yeah, I would draw area resistance here, a rectangle right here, and just it'll be very interesting. We kind of scraped up against it, bumped up against it for, I don't know, several days. A little bit of really nice retracement, kind of regular retracement. We kind of got stuck at volume weighted average price, my anchored VWAP, which started at the beginning of the rally. And then these moving averages, though, this 8, like you said, now we're above it again for the third close in a row. And then we're way above the 20. So, is it 20? Yeah, 20 EMA. And no wick at the top, right? Buyers are in control right now. This is only time 19 handles away.
Yeah, right. We're within about one ATR from today's low to that bottom of that rectangle. We're halfway of an ATR through to where we could get to the bottom of that rectangle. So, possible today to get there. And you think about it, Jim, we have 2 more jobs reports coming out this week, tomorrow and Friday. So if those reports come close to following these minor reports, I would say ADP and the JOLTS are minor compared to jobless claims and unemployment report. Now, if they show kind of the same thing, we might in fact get past your rectangle.
Yeah. Yep. And we got some more stuff coming down the pike, everybody. Let's go to the micro Nasdaq. Micro Nasdaq up 136 right now, kind of looking pretty similar here. We're attacking these all-time highs. I'll put the rectangle up there just so we could see it a little bit better. And it's the same story.
Yeah, 19,000 target. I just psychological number, 19,000, good as any place to be. Can we get there today? Well, sure we could, I think. But with the news that's coming out, I don't know. I don't know if that'll move it up enough to get to rectangle to get to that 19,000 level.
Yeah, I agree. That's a big move up. There would have to be a lot of exuberance here, but still, no wick no seller's wick at the top of this contemporary candle. And I'm kind of like bringing in my inner Dan Gramza from yesterday, Tom. I loved it when he said, look for on long-term charts, look for these big shadows at the bottom of the candles, because that's going to tell you buyers are really happy to get involved down here, right? And we have 1, 2, 3 right now prior to today. So I think that was pretty good advice by him.
Yeah, no, that's great. And see how successively those lows are increasing. It's almost like they don't want to get left behind, right? They see this train is moving up and they want to get in.
Yeah. Let's keep moving. Dow is finally trying to catch up here, Tom. This might be the fastest, in my opinion, this might be the fastest catch up market if we get into that, bull gear again. Right now, though, we have a really nice kind of retracement. VWAP is flat. I got to move it over one day, and a little bit of a bit on the upside.
So on my chart, Jim, I have also the Ichimoku cloud, and my anchored VWAP comes in a little, I think, higher than yours, just because I have adjusted data. But I see a whole bunch of confluence at that 39,000 level. Couple of 3 moving averages all coming in at that same area, including a medium, what we would call medium term on a daily, which would be the 50-day moving average, all coming in right around that 39,000 level. If it breaks through there, I think we start targeting the highs, right? 40,000 is back in play.
Yeah, and there's a little baby shelf here we got to get through. Just highlight that right there. We had 3 days where we kind of stuck there, and that's
now remember
approximately
one of those days was a holiday, right?
Yes, it was. It was Memorial Day.
So yeah, I think that you're right. We do have to get through it. I don't know if it'll be difficult to get through.
All right, fine. I hear you. That's a legitimate comment, right? Because it wasn't really a trading day. Everything was closed. So I'm moving my rectangle up. Good point. All right. Well, we'll see what happens here. Again, a little bit, not as big, not as dramatic as a bar so far today. But again, you have at least 2 days prior to that, those big wicks, those big shadows at the bottom. Again, suggesting buyers are saying, nope, let's go.
Yeah.
Russell 2000. This is fascinating. I have to move this down a tad bit, but not much. I mean, we're literally still in that triangle rather.
Yeah, and this to me suggests that maybe interest rates aren't going to be cut anytime soon. And leaves open the possibility of hiking rates. Now, I think that's a real long shot, and we could probably look at the probability matrix and they'd say, boy, you're nuts. But this to me, when you see the Russell not performing like the other stock index futures, even though today it's up 0.5%, which is better than the Dow, better than the E-mini S&P, just looking at where it is in its history, we're talking about a declining, a downward triangle, a descending triangle. We're not talking about that in the other stock index futures. So to me, this is really about interest rates.
Yeah, I could see that. I mean, we have that piercing line of the previous day's candle. We're getting there, but we're not there yet. Fed funds tool conveniently loaded here on my screen, Tom. Let me just go to the probabilities tab and see what it's thinking. So to your point, we're still tracking about a 50% chance we'll have a rate cut somewhere in this matrix, right? 30% chance we're sticking at 5 by December.
So that would be one rate cut, right?
Yeah. Well, right.
So the way I would look at it, Jim, you did a great job there. Right now, December's pricing in 2 cuts with the teal box where it has the biggest probability. But if you move it over like you did to the 5% to 5.25%, you sum up everything below it, that's a 93% chance we'll have one rate cut by the end of the year.
Yes.
Right. Whether it comes in September, November, December, okay, those are the other probabilities, but
right. In other words, there's a 7% chance we will not.
Right. Exactly.
That's a better way. That's a better way for my brain to work. Okay. And then we got little baby percentages here that we're going to have a rate increase. But so 2 on the table between now and December so far. So we'll see how that goes. Or maybe at least 1. Who knows? Anyway, and this has been kind of solid the last couple of days.
Yep.
All right, let's keep moving here. Where's my face at on the screen? All right, let's go to gold. Gold is up 13. It's back. This whole idea of Tom, this idea of risk off, forget about it. This is risk on. We have gold, we have equities rallying, we have energies rallying, bonds are rallying. And gold is kind of right at those 2 exponential moving averages.
Yeah. And so today you're right. It's green. It's a lot of green on the market analyzer. But you're right. The gold is right at those 2 moving averages that are converging, pinched between your support level and your VWAP from that anchored VWAP from the top of the trend. This is a consolidating market, right? This is consolidating market. And so I would say today, maybe a little more bullish than bearish, but not much. I'd be open-minded.
Yeah. All right. I'm with you on that for sure. I mean, I put a rectangle at the bottom here. So support starts about 45. Then resistance, I'd probably put another rectangle up around yesterday's open, 73. So that's not that huge of a range, $17, but it's still a range. My math is correct. I don't know. Let's stay with the metals, Tom. Let's go to silver. Silver had a huge sell-off. And right now it's just kind of pausing, resting, I think. I don't know if it's tired or not, but it looks like it might be resting.
Yeah, this doesn't look very, very reversal. It's in a reversal mode. I mean, yeah, it's a green bar, but it's still trading in the lower 20% of that candle before it. So
yeah. Oh yeah.
I would say in the overall downtrend, you might be looking for areas to go short. But if the day is an uptrend, because everything's getting an uptrend, it'd be a counter trend trade if you go long. So to me, silver is one to watch out for. Not in a great way, not to participate, just be very careful.
Yeah, no, for sure. I'm just going to put a horizontal line, Tom, and Mike's going to be happy I did this at $30. So
there you go.
We're getting, it's a kind of a psychological number, right? That $30, right? It's $30 silver.
Yeah.
Yeah. If you buy your American gold, silver eagles, it'll probably cost you $50 for each one.
That's what, that's interesting. You say that. I was looking at an auction online that had some coins, 1 ounce of silver, and it was different coins made by a mint, but not official currency, right? Just commemorative coins, and they were going for over $35.
Yeah, yeah.
To me, that's like, okay, that's not the way to invest in silver.
Well, and it's been like that for a while. And I asked, I don't know, several months ago, I asked Bobby Icino what he thought about that, and Bobby said, "Well, it's just simply it's a supply issue."
Yeah.
So that's why they're getting that premium. I mean, that's a big, a couple of years ago, you could have bought them for $15 or $17.
But I think it's also the premium of getting the likeness, whatever that, it's all the stuff that goes into producing a product, right? So the likeness, if you have to license an image or something, right? The marketing, the packaging, it just blew me away how much more. I mean, we're talking 35 and the auction wasn't even done yet. Probably went off at 55 or $60 for 1 ounce of silver. I'll pass. I'll pass.
Yeah, me too. Yeah, and there's better ways to invest, right? Including here. All right, let's keep moving. Let's go to Dr. Copper really quickly here. Well, again, a little bit of a pause. We have that measured move that we made. I don't know when we did that measured move, but we did a measured move. And copper right now is, again, it's a pause. We're nowhere near the piercing line of the previous candle. We'd have to get some momentum for this to be a key reversal.
Yeah, right. Real big momentum, right? We'd have to, well, I think actually you could say it's a key reversal now, but it's not very strong, right? Because it's a lower low
that's a good point.
and a higher close. But it's, again, that idea of where are we trading? We're still within the lower 25% of that candle. It's not very impressive.
Right. So, I mean, my bias right now is a little bit neutral just because everything's kind of green on the board, but I'm not going to be really overly aggressive trying to get long here.
Yeah.
So, all right. Crude oil, man, we are just moving along. Time is like, we're right on, we're like on time today, Tom.
Yeah, this is great.
Yeah, for sure. Today, and don't let the color of that candle fool you. Again, this whole crude oil thing is very very interesting. And I've been this whole kind of break in price kind of befuddled my mind. And then I got some emails from John Kemp from Reuters, and actually he's if you want to get his daily John Kemp's daily newsletter or email with links in it with data in it also, just send us an email to learn@ninjatrader.com, put John Kemp in there. It's really good stuff. But he was suggesting that, and this was Reuters also, that OPEC Plus has switched its focus to stabilizing or even regaining some of their market share lost in a couple years to U.S., Canada, Brazil. And that makes sense. If the game shifts from, hey, we want to try to get $100 crude versus we want to gain market share, which could, more market share, more revenue. That's a strategy shift that seems to have happened. And to kind of think that through a little bit, lower crude oil prices makes it harder for the U.S. shale sector to be profitable and to keep rolling there too. So seems to be a strategy shift here, and now we're at 73.60.
Right. And that's a longer term view, right? Because you're sacrificing what you could get for oil now or relatively soon for the longer picture, which is when prices do start to go up, whether it's due to geopolitical or demand, when the market decides to fire up again, you've got a bigger market share, the oil goes up, then you start reaping the rewards.
Yeah, it's almost like a classic, let's undercut pricing on our competitor, get the customer, and then we own the customer, and then we could, adjust later on.
It's almost like the $1.50 Costco hot dog, right? It's a loss leader.
It's a lot like that.
Although it's probably nothing like that.
I'll tell you what, it's not as delicious as the $1.50 Costco hot dog.
So true.
Oh, anyway, from a chart point of view, again, I'm not looking, my bias, even though we have a little bit of green candle today, we have an inside bar, and according to the wicks anyway, my bias is still bearish here.
Oh yeah, I think that's a good thing. Higher low, but lower high. You got to take out at least the open of the previous candle, maybe even the high, to even consider, like, oh, okay, we're going to get back to our moving averages, or we're going to get back to the cloud or the VWAP, whatever it is. The lower wicks from that 76 area. Yeah. I think it's got a lot of work to do.
Yeah. So let's just squeeze in Bitcoin really quickly here. I do want to talk about natural gas after the break, but let's get to Bitcoin here. Finally trying to break through my area resistance here. Let's see if we continue this. I'm a little bit bullish here on this market, just looking at this chart and this possible breakthrough to the upside.
Yeah, 72,000, almost right there. Couple hundred points off. Looking pretty bullish. You're peeling away from those that 8 period moving average. I don't know. I can't say enough about Bitcoin right now. We do have a target, I think, previous highs around 74,000. Is
Yeah.
that, yeah, we have to go back a little bit left. Exactly.
Yeah.
There we
Yeah.
go.
Up way up here. Yeah. Yeah. So there's room to grow here. I'm bullish here.
Yeah. Average true range, by the way, get this. What do you think the average true range on the Bitcoin is?
Oh my goodness. It's gotta be 5,000.
Oh, a little too high.
I knew I had to go high. Just I have no idea. What is it?
It's good. 2,800.
That's a big move.
Yeah, that puts 74,000 in range today.
What is that, like 3.5% is the average true range?
Yeah, good. Maybe a little, maybe 4%.
Wow, crazy.
Yeah.
All right, so Tom, let's take a really quick break. We'll get right back to it.
So, you want to be a trader? Well, you should know you're not alone. Over the past several years, record numbers of people have set up their very own online trading accounts. There's never been an easier time or more inexpensive way for do-it-yourselfers to get started trading the financial markets.
Better futures start now with the NinjaTrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets, and access over 40 built-in indicators plus custom indicators, all from your phone. Stay up to date at all times by enabling notifications. Get started today at ninjatrader.com.
Later.
All right, we are back. Natural gas, daily chart, consolidation, sideways price action right here. Just keep trading around that 8 exponential moving average. The 20 is still kind of moving upward, and the RSI is kind of lame. It's 56.
Yeah, we're in this trading range, which is, nice that natural gas has a trading range. It seems to have trended and then consolidated, turned around over the last few, more than few months. Big bearish engulfing yesterday. So, is there follow through? Not really. We see a little bit of a reversal today. So, we might see a hot dog effect coming if natural gas gets a bid. I don't think it will, although the EIA petroleum report might have an impact in natural gas if those numbers really surprise, because natural gas is a byproduct of crude oil extraction. So sometimes there's a little bit of residual activity in natural gas. But this is looking certainly, despite today, I think it looks a little bearish.
Yeah, right. And that, again, this piercing line idea, actually the piercing line's probably about the same on both the candles, maybe not, but we touched it and that was it. So I'm neutral. I'm neutral today. I did find this report yesterday. I thought it was interesting. This was from the EIA, Energy Information Administration, which is part of the Department of Energy. And they're really, this is a great website, EIA.gov. Has all sorts of articles and analysis all throughout the whole website on everything energy related. And I just thought this was kind of an interesting story that they wrote yesterday, talking about how volatility is kind of slowing down in this marketplace.
Yeah, I mean, you go from $11 to $2 or less, right? There's not enough points, I think, to have the same volatility at a $2 natural gas than it does at 11, right? So, that's an interesting report there. but we're seeing an upswing. We're seeing a little bit of a gain back in natural gas.
Yeah, and then nominal dollars versus real dollars were there. I mean, this whole post-COVID thing, if you want to blame COVID on this, really kind of created this outlier chart. Now we're still way lower than the average here, but right now I think maybe we won't see as much volatility now that we had this rally going on. So this was kind of a cool. I'm gonna shoot this over to Mission Control to shoot this over to you guys there as well. And as I'm doing that, Tom, I noticed who's the first to chime in today?
Oh yeah, today Cos P and Paulie H are the first two to chime in. We have two places to chat: YouTube and NinjaTrader.com/events, and they were the first two. So Cos P and Paulie H, thank you for being the first ones, and you get a special shout out. We appreciate you.
Absolutely, Cos P, Paulie H, thanks for being here today. No doom and gloom emails from Paulie today.
Yeah.
Anyway, good to see you guys. Thanks for being here. So E-mini S&P opening bell just you heard it ring. You heard it ring, folks. We cruised through our one time like it wasn't even there.
Yeah, right. I mean, it didn't spend much time there at all. This is looking pretty bullish with not a lot of news left, right? We have 9:45, we have 10 o'clock, and then we're pretty much just trading whatever comes our way. So this will be interesting to see what the institutions do. Do they bring it back? Is this a little bit extended? I'm looking. It's just been buyers the whole way since about 5:30. Imbalance has been on buyers, and that's about when we broke out of yesterday's range, yesterday's high. So we'll see where this goes from there.
Yeah, big sell-off happening right now, relatively speaking. But at 9:45 is going to be a big deal. PMI composite flash. When they put the word flash after it, it's like, all right, this is their first estimate, if you think of it that way. And then the final number is the revised final number. That comes out subsequent. In ISM services, though, this is going to be a big deal at 10 o'clock. And I wanted to, while we have a couple seconds here, just wanted to share this chart with you. We talked about ISM manufacturing yesterday in detail. We didn't really talk about services that much. And services is the same story, but a different story, right? We've been over 50 most of the time since May of 2023. Right. So that was, positive. But since the last 4 months, it's been decreasing. Finally, we have a sub 50 print for April. So this might be an interesting services number that we're going to come out. Is it going to continue this downward trend or not?
Yeah. And I think that story is important because really the services has been saving these numbers, these composite numbers. Right. Yes. Manufacturing has been trending down much before services. Services would lift that number. If services start to fall below 50, then watch out. We might start seeing the composite a little bit lower than expected. And, another point of information that might say maybe the economy is heading for a little bit of a pullback.
Yeah. Yeah. Well, the opening range is kicking in now 245,000. So not a huge start volume wise, but we're early. It's only 2.5 minutes, 3 minutes into the first 10-minute candle of the opening range. And we have an opening range established so far pretty much. And R1 we're flirting with R1 again on the downside.
Yeah, and we've seen these pullbacks even in this trend, right? We've seen actually. This is probably what I would call the third pullback in this uptrend that we've been seeing since about 3 a.m. It's a little bit more extensive just because there's more volume and more participants. But I don't think we have to really worry about it until we start taking out that icicle wick that we saw, right before 9 o'clock. If we can start to get there, then I think maybe the trend is neutral to range bound. But right now I'm still bullish on the E-mini. Yeah, no, I hear you. And is this the icicle look you're talking about right here at 8:30 to 8:40 candle? Exactly. Yeah. Okay.
All right. Well, let's see how it goes. I mean, we're at a 37.5% retracement, which is, kind of textbook normal so far. The volume profile on the left-hand side is very immature. In other words, it's very wonky right now. We do have a point of control pretty close to where we're trading at right now, but there's not a smooth distribution of prices right now or of volume right now. It's kind of jaggedy. So it's not helping me that much other than the one standard deviation of these prices, a volume profile is above previous sessions highs.
Right.
So I think this is where this market gets into trouble. I think this market gets into trouble, as soon as we get south of that 62.5 into that zone right here. But again, it could hold. Who knows? But I have a warning ellipse, Tom. I'm gonna call that a warning ellipse.
So that might be in a micro. It might be a good 2 or 3 unit trade, right? And we're going to explore trades after the 10 o'clock hour starts, but you might see something 37.5 right here go long. It kind of stays within that uptrend. Put your stop in where Jim noticed the bottom of the value area, which is right near that 62.5. You could also look at it as a second entry long, right? If you're in it for a longer term.
Yeah, for sure. There, a couple of different trading strategies there, but let's not put the horse before the cart here. That's
or the cart before the horse.
We don't want to do that either.
Right.
We do not. Just stay away from the horse. The horses are beautiful, but they kick.
Yeah.
A micro.
Have you ever ridden a horse, Jim?
Oh yeah.
Yeah. Okay.
Yeah.
Good.
Yeah. A couple of times. We coming from the growing up in the urban inner city of Chicago, there's not a lot of horses.
Right.
Do you remember that one guy though who did ride around the city of Chicago?
No.
So this fellow lived in like a lower income area, and when I used to take the train from down, Ogilvy Transportation Center, downtown Chicago, to the first suburb where I lived, right? It wasn't that long of a train. It was only 10 miles. It was a pretty quick train ride, but you would drive through the inner city part of Chicago, and you would see some guy in his backyard had some horses. I mean, it was his backyard.
Wow.
And yeah. And then I guess every once in a while, this guy would just ride around, and it was a big deal. I remember, I think something happened though that put a kibosh on it.
Okay.
Something happened to put a kibosh on it. So you can look it up. The guy was called, he had a name. It was like not the urban cowboy, but something like that.
Horse guy, maybe.
Yeah, it was fun. Yeah. Anyway, NASDAQ's looking the same time, a little bit of retracement, not quite as far down. R1 is way down here. Again, the volume profile is not helpful that much. And VWAP is pretty far down. 62.8 is pretty far down, but again, it's close to previous sessions highs. Again, that's going to be a little danger zone for me right now, but buyers are fighting right now. They're fighting this red candle.
Yeah. And I think if it, again, it's kind of the same idea, right? If it stays up where it's trading right now, you've got a higher low than the previous icicle wick, kind of in line with this uptrend. To me, this might be a buying opportunity. Although I do see a lot of sellers coming in on the cumulative delta. And if there's no follow through, then those shorts get squeezed, or those sellers get squeezed. So, it'll be interesting to see what happens here if the market just stays where it is and continues on this uptrend, or if those sellers are in fact, correct and put pressure on this market to take out that icicle wick. I think that's, that icicle wick is, again, just like the E-mini S&P, an important target to determine if we're range bound or even going to turn around, or do we just stay within this uptrend?
Yeah. And, there is a correlation I'm noticing, Tom.
Yep.
And that is the equity markets seem to rally when the FOMC members are in their quiet period and they don't talk. You guys just shut up. Everything's going to be fine. Oh my gosh.
Well, along those lines, Janet Yellen spoke yesterday, and the market pulled back a little bit.
It's fascinating, right? It's almost like clockwork.
Yeah.
Right. She will do a major speech on the economy in the quiet period. It happens all the time.
Right.
I'm not criticizing it. I mean, it might be the best place to get your policy ideas out, status of your policies out, because there's less noise in the atmosphere. So I don't blame her for it, but I'm just saying it seems to happen.
Yeah.
All right, let's go to the Dow. Dow's up 39, which is pretty much unchanged in my book right here. A bigger sell-off on the opening range so far. But this candle's relative. Let's see how big it is. High to low. Well, actually, it's pretty big. 92 points. 92 Dow points.
Yeah, and brought back to yesterday's close, right?
Yeah.
I mean, look at that. Yesterday's close acting as support. It's, this kind of looks like, well, the Dow could be range bound. I think, now that yesterday's close becomes really important, right? Do we make a new opening range low in the next 20 minutes? Or if we don't, that becomes the opening range low. And now you're kind of in this area where you have two reasons why the market, if we break it, we're going to zero.
That's right. And we're on our way. Right. So again, this is the weak link so far. Let's go to the micro. Let's go to the Russell 2000 on a 10-minute chart. Here again, we see a kind of a weak looking volume profile. Again, it's immature. It'll fill out as we go, but a pretty nice sell-off here and that first 10-minute candle.
Yeah, and I see this. If you go from the low at about 430, where you have that nice reversal pattern, that 3-bar reversal pattern, you extend a trend line to the lows. You can see the next peak lows, that kind of thing, or trough lows, whatever you want to call it.
Yeah, so something like this.
Maybe, something like that.
We're right there.
Like we're kind of still in this uptrend, right? Even though it looks ugly. The opening first 10 minutes, oh my gosh, that's a big candle. That's almost 100 points. Yeah, but we'll see if this trend line can hold.
Yeah, and we should trademark that ugly candle. Is that something we could do?
We probably could, although it's probably already trademarked, I'm guessing. Not for chart reasons, probably for actual candle reasons.
Yeah, so just to kind of, oopsie, let me get this out of the way. Oh, I'm not going to make it, am I? I'm messing this up more than it's possible. Let me try it. Let's try this again, Tom. I'm going to do the ruler. I'm going to go from the wick up.
Oh, yeah.
And I'm going to go to the bottom of that red candle. And I'll move the flag over here somewhere. So that was a 10, almost an 11 point sell off from that peak down to where we ended previous candle.
Oh, 11 points, right? Yeah. Did I say 100? No.
No. You didn't say anything. I just thought I instead of, it's easier for me to do this than to do the math in my head.
Right.
Because the math in my head, first of all, well, it requires a lot of energy. Let's just say that, a lot of brain activity, and I'd rather save that for something else.
Got it. So,
all right,
just so you know, Jim,
the
range today is about half an ATR, half an average true range. So there's room for this market to extend up or down.
Yeah.
And be well within an average trading range. With not a lot of big impactful news, though, it wouldn't be surprising if we don't get to an ATR today. That's not a bad thing.
Yeah. No, I hear you. So we'll see. We'll see where it goes. Kind of right in the middle right now. Let's keep moving though, Tom. By the way, Tom.
Yeah.
Who's here with us today?
Oh, we've got a great group. We've got Aviator and Miho GDP 29. I think I'm going to get to the point where I don't even have to look at the screen. I see Miho. I know it's GDP 29. James is here. J-Man, same thing, 2005. I know that. Mom and Dad Cags, good morning. Robert W is here. Mark R, Raleigh, Nola Boy, Coder for Traders, Gary, Engineer Bear, ILDE Amador, Infinitely, Anissa, good afternoon. Eric H, Error H, Scott K, Bow Hunter, AA Ron is here. R Crawford and Imran Alam is here. The Lieb, Thomas Bolatow, Jen P, Ames, Jeanette, Mario R, Eagle for Money, Eugene Burku. I'm going to say that right, I hope. Welcome. Foggy Cape is back. Mac Rangers is back. Sunny and Hida are back. Quincy S, Psycha Claire. Those look like new names. Thanks for coming. Mr. Freeman is here. Brad F, and Stephen Rios. We've seen that name before, Jim. All great people joining the chat.
Yeah, I second that motion. Thanks for being part of this community. You guys have really done a fantastic job. Appreciate everybody supporting everybody in this very difficult task called futures trading. So thank you for being with us. Greatly, greatly appreciate it.
You said difficult.
It is difficult.
Yeah.
It's not easy. I mean, if it was easy, you know, we would be doing this from a lounge chair at Burke's house in Southern Florida, drinking pina coladas or whatever you like to drink. It's that easy.
Right.
We should do that anyway. Broadcast live from Mike's backyard. I think we could get travel for that.
He'd be like, get out of my house after a day. What are you doing?
No, we would just show up. We'd be in this backyard. He'd be like, what are you guys doing here?
Yeah.
All right. He's like, he's changing the locks on his gate right now. All right, let's go to gold. Gold's higher high, right? First thing I noticed off the bat, Tom, swing high, 1:30 in the morning, a higher swing high. It's the very first thing I noticed. Now I don't know if that means anything or not, but it's gold is a little bit strong still, even though we're having again this kind of systematic retracement that's going on across all the asset classes right now. But that's just normal.
Yeah, it looks like a very there's a trend channel there as well, but it's very the slope is very, it's not steep at all, I guess. I'm trying to think of the word. It's almost horizontal, but it's not. It's got a little bit of an uptrend to it.
This kind of guy?
No, I'm going way back.
Way back.
Connecting your peak highs. Right.
Oh. Okay.
I'm going.
Right, let's try it again.
I'm going full.
Well, and then we could look
session.
at divergence or convergence on the RSI, but let's do that. All right. So reset. All right. So from here, starting here.
Yep. That's fine.
Going here.
Yep. Just
clicking
down there. Yeah.
Oh, look at that.
Yeah.
How do you like them apples? It's nice.
So if you want a range to trade, if you think today is a trading range day, because we didn't feel very bullish or bearish on gold, right? It's been kind of stuck in a range.
Yes. Good point. So that's a $14.40 range.
Yeah. So, you can trade accordingly, let's say, right? Now, if you think this trend is going to be in play, you have a target, lower end of that trend channel, or some percent along the way. You can use Jim's Fibonacci harmonic tool and mark the distance from top to bottom and see where that is, where those levels fall.
And we're going to do some magic right now, Tom. I'm doing an anchored VWAP.
Okay.
From this latest trend, and we're right up against it, which I love. I love that. So, shoot. Did I just move it? I did. I got to slow my, no, I can move it back one.
There we go.
So this is again, my Brian Shannon's coming out. This is a retracement back to the anchored VWAP that was established because of the trend that we had up that started pretty much at 8 o'clock this morning. And this is a touch point, right? And touch points could, be one of two things, which is, I'm going to state the obvious, but it could be poised for a breakout, or we could be, it could act as support. We need a confirmation candle right now. We did touch it. But that's I think this is a kind of a way to apply the anchored order flow anchored VWAP.
Right. Exactly.
So, and coincidentally, we're right about 50% retraced. So, where are we at here? We have nothing but time. Let's go. Did we talk about crude oil? Yeah, we did. Of course we did.
We did on a daily.
Yeah, we didn't do it on a 10-minute. Let's get that guy going.
So remember, crude had a big sell off, and now we're seeing if crude can regain a little bit.
Yeah,
some of it
yeah.
sell off.
Yeah, I'm doing that. I'm doing that anchor again, Tom.
Sellers in control.
Yeah, I mean, from that point of view, for sure, sellers have kind of taken over right now. In this, we still have we only have 10 seconds left. Let's stay here 10 seconds for this candle to finish. Let's see what happens. RSI is 48, 47, and falling. This looks like a pretty decent sell-off in the making. Maybe we crossed through the second volume weighted average price.
We ticked through it, right? We wick through it. Now we're kind of trading right north of it.
Yeah.
Now this kind of reminds me of gold too, right? Like maybe a little more bearish than gold, but
well, actually, I'm going to change my fib line here. I'm going to take into account. I'm just going to analyze the latest nonstop trend, right? So what I'm doing, I'm ignoring this little
pullback
retracement, right? Pullback. Yeah, there we go. Correction. And I'm starting it at 6 to 610 candle, and I'm going all the way up to this peak high here, right above R1. So this is the section I'm analyzing. And we'll see where we retrace from there. And right now we're like, all right, 50%. Yeah, we closed below 50%. 62% is definitely on my radar screen here. It's kind of an important number. And that would be about where we'd get that confirmation candle if, in fact, we do close below the session VWAP. And I'll just draw another thing right there. So that could be a signal to go short.
Yeah.
So
yeah, I would say let's come back to this at when we look for trades.
We'll come back to this. I think that's a good thing that's a good suggestion. It's easy to do. I have my market analyzer, Tom, linked to the chart. So it's easy. I just click on we call it the market analyzer because it does so much more than just a quote board. But people, if you're brand new here, you're going to say, oh, there's a quote board. Well, it does a lot more stuff. That's why we call it the market analyzer. You could add columns with different, with the VWAP. Right, you could show your VWAP in a column. You can color code it. You could, do all sorts of other stuff with this. So, but I have it linked. The point is, if I want to look at copper, I'm just going to click on the copper, and it'll pop in to the chart, and it will keep all of my settings, my order flow volume profile, my pivots, everything, except for the drawing tools.
Right. By the way, Jim. We didn't talk about the news that came out.
Oh.
So
what happened?
So services PMI came in as expected, 54.8. The composite was a little better. This is the S&P numbers now. This is not ISM, this is S&P.
Yep.
Composite beat the forecast and increased over last report. So 54.5 versus a 54.2. And last report was 54.4. So ticking up instead of ticking down. We'll see if the ISM reflects that or if they have their different set of numbers. But that could explain, if we look at, let's say the E-mini S&P, you'll see that when this came out, there's a big seller's wick on that bar.
Yeah, let's go back to that. Let's go back to the E-mini S&P and look at that. And so composite composite is pretty much, it combines the services and the manufacturing, right?
Exactly.
There's probably some sort of CMT equation for that.
Well, we had the manufacturing come in earlier this week, right? And then we had services today, and then they can determine what that composite is.
Yeah. So
both pieces. Yeah.
This was released.
That exactly.
This candle right here. So let's take a peek at that. Let's open this up a little bit more. So previous candle, that's what happened, right? So, but interesting, Tom, it almost seemed like, oh, let's rally. You know what I mean? It's like, oh, let's rally here. And then, they came to their senses and came right back down to where we started.
Right. So if you wanted to see, what that was at 9:45, it was a little bit of a tick up. So into that report, market was rallying. I went to a 1 minute chart, but you can go to a 5 minute chart as well.
Okay. 1 minute. All right, we could do 1 minute. Let's do it. Oh boy, now I got to figure out. All right.
Okay. So
bear with me, everybody.
You see that doji right there?
Yeah.
Go to the left.
Yeah.
About 4 bars before.
Yeah.
There you go. That's your 9:41 candle. That's the start of the candle that we saw. That was like had a really huge seller wick. Market was rallying into that number. 9:45 it comes out.
Mm-hmm.
Right. So 9:45 it comes out. So that's the next candle is when it came out.
Yep. It comes out here.
A little bit of confusion, right? This is good or bad.
Mm-hmm.
And then it just turned around.
So this is a good lesson, though, because the number is released. We had, a rally up to 74, 75. We had a breakdown to 20, 25. After a minute, the market said, okay, I don't know what to do. I'm going back to where we started pretty much, right? Pretty much, a couple ticks away. And then started trickling down. So now it's like, all right, we're assimilating this information. Minute 2, minute 3, minute 4, still not sure. Then minute 5 and minute 6. All right, we're selling off. And that's a good lessons learned, because it's like when you're trading in front of a number, you're not the only one that doesn't know the direction. Once the number comes out, the whole market doesn't. And then eventually, the mass collective has an opinion, and it drives price.
Yeah.
So don't randomly put trades in front of a number, people. That's my advice.
And we've got another number coming up.
Yeah, 10 o'clock.
10 o'clock.
3 minutes. I think 3 minutes. Yeah. 3 minutes, 4 seconds. Anyway, we're right at the Tom, we're right at the session VWAP. Again, I'm going to draw another one. I'm going to draw from the recent lows. I'm going to draw a anchored VWAP. And we'll see what that's bringing us in terms of area support or resistance. Ooh. We're right at it.
We're right at
it. Yeah, we're right there. So it'll be interesting. After the opening ranges, the other thing that's interesting so far, well, we'll see if this candle, are we going to have two? It's the weirdest possible doji we could have here, right? We could have a doji with a huge wick on the top and a huge wick on the bottom if you were to put these two 10 minutes together.
Right. Look at how nicely, though, Jim, that anchored VWAP has held as support.
Yeah.
So it wicked down. What is that? Right after 7 o'clock. It wicked down to the VWAP twice.
Yeah.
Got a bid, and then it came back down again. And then at the right before the news, right at the open, we have the dominant candle that went right to the VWAP, anchored VWAP.
Yeah. We did it again here. Oopsie.
Now, some of that, that anchored VWAP will change with volume. Not so much price at this time because of how much volume there is.
Mhm.
But at the opening range, when the volume just dwarfs all the volume before it, then you get, just remember that VWAP was probably lower and pulled up to where we were trading.
Right. And the slope is important, right? Now it's like, are we gonna start arcing down? Or are we gonna go flat? Or are we gonna continue on, upward? We only got 50 seconds left to find that out. But the slope of the VWAP, I think, is important.
Yeah, and with this buyer's wick buying so much below the VWAP, it pulls that VWAP down. You kind of have a flattening out the longer we trade at the same prices with volume.
Yeah. No, I agree with that. And the danger zone, we're getting close here, but again, I want to see a candle close. I just don't want to see a wick. Wicks aren't good enough.
Right.
Wicks or shadows. Some people call them shadows. I don't know.
Yeah, that's
all right. Well, so opening range is almost done. Let's go ahead and take a really quick break and see what trade setups are on the horizon.
Awesome.
So, you want to be a trader? Well, you should know you're not alone. Over the past several years, record numbers of people have set up their very own online trading accounts. There's never been an easier time or more inexpensive way for do-it-yourselfers to get started trading the financial markets.
Better futures start now with the NinjaTrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets, and access over 40 built-in indicators plus custom indicators, all from your phone. Stay up to date at all times by enabling notifications. Get started today at NinjaTrader.com.
We are back, NinjaTrader Live. My name is Jim Cagnina. My partner, Tom Schneider, from Long Island, New York. Tom, how about that report? And look at that wick or that shadow that happened on the contemporary candle.
Yeah, so this is why we tend not to trade around news reports. The ISM services report came out, and this was, I think, all intents and purposes, a great report. It's a beat in most cases, not all, but even the misses were good. I think we'll talk about that. So the services PMI, the kind of the headline number, 53.8. It was forecast to be 51. So that's a pretty big beat. And that's up from last report's 49.4. So it went from being, this diffusion index of contraction to expansion. Let's look at it that way. I think you and Dan talked about that yesterday. Prices paid was expected to be at 59. It was actually at 58.1. So that seems like a good thing, right? Less inflation than expected, or inflationary pressures. New orders, again, a beat, 54.1 versus 53.2 expected, and that's up from the previous report's 52.2. So another good number. And then, of course, employment was up from the last report. 45.9 was last report, reported 47.1. It missed the forecast by 0.1%. I think that's just not enough to even make a difference. So I think on all four numbers that came out, this was a good report. And what did the market do? Good news is bad news. Kind of came down a little bit, right?
Yeah, it's exactly what it did. Now it's trying to hold its own still. And right when we went to break time, we just saw the velocity of this market just boom explode, creating that wick that almost went all the way down to the lows, or at least the low of my fib line, around 5306. And that's a target wick for me right now. We're entering into my danger zone right here. This could be a case of, hey, maybe we should get short instead of long.
Yeah, we should rethink that. I mean, look at how low we went on this target, this wick, this low is almost not just to yesterday's close, but if you look at earlier in the day, we had a low at 5305 and a half. We were just off by one handle. So, this tells me the market's exploring going back to where it was near the lows of the day.
Yeah, I know. I agree. So a little bit conflicted here with the bias. My bias is bullish in this market, and now we're retracing more than I'm comfortable with. But let's give this a little bit more time and maybe check out the Dow, because the Dow is doing a lot worse.
Yeah, it's the only stock index future that's down from yesterday's close, right?
Right. And we just wick through the pivot. I mean, look at this. I mean, this was the number exasperated. ISM exasperated price, but it was just selling off. I mean, lower high, lower high, lower high, lower high, lower low, lower low, lower low, lower low. And this is looking pretty gnarly, Tom.
Yeah, and I think that yesterday's close was kind of that breakout area, right? Yesterday's close, we broke out in the opening range. We didn't wait for the ISM report. It broke out at the S&P report. So just, I don't know, kind of marches to its own drummer, right?
Yeah, right. Will they all follow suit? Who knows? But this is the weak link for sure.
I'm targeting S1 today.
Oh boy. That's right by that. Why do I have this line here, you think? I don't know what that is. That's from yesteryear. S1 is 527. So that'd be another 350 points. That'd be I think, do I have that right?
Oh, about 140. No, 160. 160. So
okay.
So think about this. The high of the day is 916. The average true range is 416 and a quarter. So let's call it 416. Yeah. That average true range target is 500. It's below S1. So I think it's feasible.
All right. So what do you think? Try to get short at the pivot again?
Yeah, probably. Yeah, maybe we try to get short at the pivot.
Just do a fib real quickly.
We might have missed it too. I mean, let's.
I don't know. Maybe. I mean, we could do a breakout trade too, but I'd rather be patient. I mean, this isn't even 25% up where our order is. It's right next to an important, the daily pivot.
Yeah.
And this is an awful lot of selling. Let's just go back to a daily chart just to refresh our memory here. So again, we have, well, this is looking bearish engulfing in the making, possibly, or an equal and opposite, possibly. Remember, buyers are coming in here. Buyers are coming in here. Why wouldn't buyers come in? I'm just going to draw a rectangle to highlight that. Why wouldn't buyers come in now? You know what I mean? In here.
Yeah. The only thing that's changed are a couple of ISM's S&P reports, right?
Yeah.
That's the only difference between yesterday's low wick and today's.
Yeah.
So is that enough to say, well, you know what, actually we can lower that buying area?
What do you mean?
Well, I'm just thinking, like, was there enough in these reports to tell the market, hey, yeah, actually, let's go lower? We're not going to buy. We're not going to really, sellers aren't going to stop. Buyers aren't going to stop there.
Right. Right. Well, let's keep moving around the cabin here. Let's go to Russell. I know we've been picking on Russell a lot. It's not fair. You should not pick on somebody just because they're, a unique phenomenon.
Right.
Wow. The previous sessions lows have kind of held.
Yeah. I mean, it went right there, right? And held. Our trend line did not hold so far.
No, that's ugly.
But here's the thing. Until this candle closes below it, I'm going to keep it.
You are. Okay.
If this market turns around and we close above that trend line, it's still intact.
Yeah, you're right.
Yeah.
You're right. VWAP, forget about.
Yep.
I don't think, no matter how you draw a volume weighted average price, we're going to be trading below it. So let's just do an anchored one really quickly here. Down a little lower. We'll just go this way. Yeah, I mean, they're in sync right here. I think sellers are in charge of this market also.
Yep.
Let's go to NASDAQ, micro NASDAQ. Now this is holding up nicely, Tom.
Yeah. No, this is for sure holding up nicely, and different dynamics going on with the different indices. We did see a bunch of sellers come in at that 10 o'clock bar. But right now, kind of no advancement, even though this candle is a little bit green. I just see a lot of congestion up at that, up at that area, opening range high. It doesn't seem like this market wants to get too much higher, although I do see higher lows. So, what's going to move this market going forward? I don't know.
Yeah, I know. We're still in the opening range, right? Both volume weighted average price of both VWAPs I added, we're trading above it. They've held 37.5 is held. The RSI is, zigzaggy, but I don't know if I see any divergence necessarily, maybe a little bit. Let's go ahead and add some lines here. So just to kind of couple of touch points here on that RSI. The first one at 920 to 930, we closed pretty high. The second one, we closed a little higher. At the RSI was a little lower. So that could suggest some divergence also, Tom.
Yeah.
So maybe we go short in this market if you want to consider divergence is important and consolidation, which is important.
Where would you go short? Would you try to get back up to that top of that value area / opening range high and try to short it again? Or would you go more for point of control?
Well, point of control is like a destination, but it's pretty close to the piercing line and the bottom of that top of that first standard deviation line. So I'd probably do a 2 unit. I'd probably do one here. Shoot. Let me use the chart trader one. Well, I'm going to miss it at this point. Let me get there we go. So we're short. Yeah. So I'd probably do one there. And then the second unit, I guess this is kind of where the rubber meets the road, right? There's two trains of thought here, right? There's one train of thought is, let me center this. Adding on to winning positions is a good thing.
Yep.
The other train of thought is, well, let's just, we were patient. We got our limit order. Well, it didn't turn out to be a limit order because the way it went in, but we got our price. Maybe we're going to, suffer a little bit more stress toward the top of the consolidation and get a second unit up there. So those are two different strategies, Tom, and I'm totally open-minded here.
Yeah, I like the patient idea.
Okay. So let's kind of investigate a little bit more. So bearish engulfing big time.
Yep.
Didn't really break through on the downside. We wicked through it. On the upside, geez, I don't know. I mean, I'd be worried if we got short, too high up, then we're going to break out and make new highs. So I would probably be looking at the tops of these candles,
Yep.
930-ish like that for a second unit. We'll see if we can get that. And then we could tell ourselves, well, on a breakout on the upside, we might be wrong. But remember, this has big wicks, this particular market, right?
Mm-hmm.
So, I mean, just look at the trading ladder. So because of those big wicks, we don't want to artificially, or, I don't want to be accused falsely by getting stopped out and being directionally right. So I would probably give myself a little bit of room here. What we could do on this fib though, Tom, I could make it an extension.
Well, you also have R2 up there.
We have oh yeah. Let's do the extension first, and then we'll talk about R2.
Yep. So what Jim is doing here, he's going to change the template on his existing Fibonacci retracement.
Yep. Load the harmonic fib, apply an OK. It's going to give me some negative numbers, right? Negative harmonics. And so the first negative harmonic is up here by minus 12.5%. Corresponds to the top of that second standard deviation band. And then the 25% corresponds to R2 pretty nicely here. So I think you're onto something here, Tom, by being out up here. And then again, if we get that second unit, it'll be good.
Yeah, we'll see. Now,
right, 2 lots are in.
So you've got a position.
Yeah.
So where is your target to get out?
Well, that's a great question, Tom. I don't know yet. No idea. So, again, pigs get fat, hogs get slaughtered. I mean, I see R1 right at 37.5, right between the VWAPs. That would be kind of a conservative entry to get out. If we just only end up with 1 unit, if we ended up with 2 units, I think I'd reconsider that.
Yeah.
So 50%, 62.5% is more aggressive. Bottom of the value area is also in play. I think the bottom of the value area is a destination sometimes. So I don't know. Do you want to be aggressive or do you want to be conservative? We have this low wick right here at 18,800. Nice even number.
That's right by the VWAP, by the anchored VWAP, the session anchored VWAP as well.
Yeah. So let's test that out.
Yeah.
Okay. And then again, if we get the second unit, we change things up.
Right.
And let's just kind of pull the trading ladder here to give us a sense of price action. I mean, it's thin, the bids and asks do not stay in this order book for very long. I mean, as you could imagine, I mean, just look at how fast price is changing tick for tick in a micro NASDAQ. And that's why those bids and offers are so long in a very heavy market. There's almost as much volume here in the micro NASDAQ as there is in the classic E-mini S&P, tracking 439,000.
Yeah, you think about that. We're trading, NASDAQ trades in the 18,000s, right? 19,000s, whatever that number is. But the tick size is a quarter, right?
Yeah.
0.25. So you've got a lot of, if you think of in percentage terms, that's like dissecting 1%. And I'm just, kind of for illustrative purposes into ticks. That's huge. Right? That's like, how many ticks is that? 1% would be 180 times 4. That's, 500 and whatever ticks, right?
Yeah.
Am I doing that right?
Yeah.
Maybe more.
Yeah.
720 ticks. So yeah, it's going to jump around.
Yeah. So let's see what happens. We'll keep this view here for a second. Tom, next Wednesday though, we have a special gig.
We do. We're gonna work extra hours. We're gonna do a little overtime, right?
What? No one told me that.
But we enjoy it. We're doing a special client only event. All you need to do is log into your NinjaTrader account, and you can do that just by going to ninjatrader.com. If you don't already have an account, you can just provide your email address. You'll get a login, and then you will be able to view the special event we have next week, which is around the FOMC announcement.
Yes, that will be a lot of fun. And we have special guests, right? So we have Seth the Speculator.
Yes.
We have Dan Gramza.
Yep.
which is interesting, right? We have they're two kind of different personalities, right?
Oh yeah, and slightly, obviously different experiences, but a wealth of knowledge. Certainly, Dan, for me, encompasses a lot of things: trading, uh, um, technical and fundamental analysis, just as experience with the markets. He's a great guy to have on. And speculator Seth has an institutional aspect to how he looks at trading. So he's going to be coming on. He'll be on first, right? We'll sit with Seth, talk about he might have traded that morning, anticipating the number. We'll get the announcement, and then he actually does a little bit of live streaming himself of the presser. So he actually live streams the presser and makes comments and all of that. We will be with Dan Gramza at that time. So we'll dump Seth, we'll bring on Dan, and then we'll get Dan's analysis of what happened at the announcement and what happens at 2:30 when Chair Powell speaks.
Yeah, we're not going to dump Seth. We're gonna thank him.
Did I say dump? I meant to say drop.
I know. Well, right. We're going to transition.
Yes.
Right. Yeah. Not in the modern sense of the word, but in the old sense of the word. We're going to transition.
That's right. Right. I don't know what you're talking about, but okay.
From Seth to Dan. Anyway.
Right. Right. It'll be fun. It'll be fun to have both speculator Seth and Dan Gramza on with us to talk about the FOMC announcement and watch it unfold live as it happens.
Yeah. Awesome. Can't wait for that. All right. So and then by the way, today we have like an all-star cast.
Yeah.
We have an all-star cast. We have Gavin Holmes, trade guider, coming up next. Then Tom, you're with Jose Blasco.
Yes, from Tradictive, we'll be talking about, and he's been so kind to share with us his views on identifying biases and entry points. We're going to be talking about exit points today.
Awesome. And then in market wrap up, we have Jimmy Iorio.
Oh, I can't wait.
I know. So, and that's what we'll do. We'll just cover that. We're going to wrap up the markets. We're going to cover each asset class and get Jimmy's opinion on them.
This morning, I listened to his and Bobby's latest podcast.
Oh, yeah.
And it's right up our alley, right? It's basically what's going on in the state of Illinois.
Oh, boy.
Yeah.
Oh, boy. This is a family show, Tom.
It was a great podcast.
Yeah.
One of the best.
Mm-hmm. Oh, here we go. We have a move of foot, Tom. We got our second unit. And we're approaching the highs. That's okay. When you get this kind of velocity up here, you're going to have a unrealized P&L right away. That's okay. Don't freak out just yet. Really, when the freak out point is like, if we get to that minus 12.5%, that's when we start freaking out. Right now, we're good. We're okay.
And where did you put the stop? Did you put it above R2? Yeah, I see it right there.
Okay. Yeah, I might have. I was like, all right, we're going to be at that minus 25 level, R2. It's all pretty much the same. But from an ATR point of view, we could blow through that, right?
Exactly. I'm wondering if we don't tighten it up down to that 12.5%.
We could do that. Hang on, let me just get this measurement in here. All right, so far we're up 167.5 points high to low. And what's the ATR?
For this market, the ATR is 245.
Okay, so that brings us a lot higher.
About 80, about 88 handles. Higher.
Yeah. Okay. Yeah. So I'm not even going to draw it because if we get there, we're in trouble. But if you want to tighten the stop up, I think that's prudent, right? We'll bring it down to 12.5, right at the top of that VWAP band. We haven't seen the top of the VWAP band as it's arcing up since 920 to 930 before they open. So I think that's a reasonable area of interest combined with that minus 12.5 right now. This is though a pretty big, this is the second higher low and the first higher high, but we just took out this high. We're almost messing up my fib line, Tom.
Yeah. I mean, we're right there. We're a tick. No, we're at the high right now. We're above the high.
Yeah.
What I see are buyers are really coming in on the cumulative delta.
Okay.
So buyers are in control right now.
Okay. Very interesting. So right now, my lesson learned here, Tom, is this VWAP. We got filled somewhere else also. This VWAP touch was beautiful for an entry.
Yeah.
Beautiful for an entry.
And that VWAP touch, I think we looked at it earlier. It's just been kind of there. It's been supportive, that anchored VWAP from the low that you marked. It's been supportive every, it's probed, markets probed the VWAP and bounced right off. And that's great, great observation. The question is, why is it getting a bid right now? Why is this the dominant candle of the day? What happened?
Buyers came in.
Well, we know that.
All right. Well, we're also filled in the Dow. Let's go to the Dow. We got
stopped out, I'm guessing. Did we get stopped out? No, we got
we just got short. Remember, we were patient. We did something right.
Oh, that's right.
We said, all right, let's wait till we get to that. You're like, what? Is that true?
You did something right.
We did something right. We were patient, right? And so, this is not a micro, right? So we did get stopped out in the micro, but this is not a micro. So we might want to consider stops and targets and all that stuff. So again, I think it would be a natural retracement to the 37.5. So I'd want my stop to be above it a little bit. This is not a micro. This is the $5 tick. What are you thinking about stop time?
Yeah. I mean, we have to look and see, I think, what does the chart look like in our mind? What does the chart look like if we were to get up to the stop now or in the future? And right now we've got higher highs, higher lows. If you, let's say the stop is at that 37.5% retracement, you're talking about basically an equal and opposite move, right? After after such a big move down over the course of 4 bars. So is that recoverable? Meaning, is our trade recoverable at that point? Now we're only trying to, we're at the pivot, we're not at the lows. So I don't know.
Well, the other thing to think about too is, so for an equal and opposite, right, to get all the way back up to 738, which is reasonable in my mind. Question is, how long does it take, right? Is this a case where it takes several more bars to get there?
Right.
If that happens in my mind, then that's just a regular textbook retracement, nothing to freak out about.
Right.
If it gets there like this candle, then it's something to freak out about. We could be directionally incorrect. So from a stop loss point of view, I mean, those are, what's your expectation going forward? How long before this market either rallies again or breaks down again? And that could kind of be a judge, right? If it's going to be a quick, move back up here, then I would put my stop there. If it's going to take several candles, then I'd be higher. I would be more patient.
Yeah, I was looking at that value area low.
Yeah, that's a good one. That's a good compromise. Let's do that.
Now that value area low will adjust, right? So as we trade, that value area low will come down.
Yeah. Because
remember, it's the value area is 68, 70%, something like that of the total volume. So as we add more volume, it has to expand around the point of control, which means it can't really go up because it's already at the top. The top end is already at the top. It has to come down. So something to think about.
Yeah, no, I know. And we can monitor that. The active trade management right there. But so far the pivot's holding on this contemporary candle. Long way to go today. And then the target, we need to put it in a target. Even if we're going to change it, we should put it in a target right now anyway, just in case.
Yeah.
Yeah, man.
Yeah. Dow 417. I mean, I come back to that 500 level that, our S1 would be a little bit more conservative, I think, or even above it. I know it looks kind of hard to reach now, but
Yeah, another thing to consider too, folks, is you could even be more dynamic on your stop management, right? If you get once you get a certain amount of traction, and then you say, all right, I'm just moving my stop to break even plus a tick at this point, right? Or the high of the wick, right? We have another minute and 2 seconds for this candle to expire, but in my mind, we start trending back to the zero line with the zero level, which isn't zero anymore. Oopsie, move it down. Then maybe at that point we start moving to break even. Make sense?
yep. Well,
All
so
right.
we're basically making new lows. If we start making new lows on the day, trail it down.
Yeah. All right. Well, Tom, we did a lot of work today. So one trade idea, not so good. Second one, so far so good. So we'll kind of wrap it up here. We'll talk about it at the wrap up.
Lessons learned real quick. Sometimes it's
Yeah.
good to be patient.
Yeah. Right. For this trade, that was a good lesson learned, right? We just didn't get short. And then now we're sweating it out for 20 minutes and everyone's all upset.
Right.
And now we have an ability, if we want, if we don't have conviction that we're going to get to our target, we could move it to break even right now if we want.
Exactly.
So, all right, let's go ahead. Coming up next, joining me live, the amazing Gavin Holmes, trade guider. We'll be right back.
So, you want to be a trader? Well, you should know you're not alone. Over the past several years, record numbers of people have set up their very own online trading accounts. There's never been an easier time or more inexpensive way for do-it-yourselfers to get started trading the financial markets.
Better futures start now with the NinjaTrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets, and access over 40 built-in indicators plus custom indicators, all from your phone. Stay up to date at all times by enabling notifications. Get started today at NinjaTrader.com. Technical analysis made easy. A starting place for new traders. When do I place my trade? Where do I set my stop loss or profit target? All good questions that traders need to answer on a regular basis. One of the ways traders get to those answers is by using technical analysis in a historical price chart.
Join over 800,000 users who trust NinjaTrader as their futures trading platform of choice. Access the world's most popular futures markets and trade seamlessly across devices, including PC, Mac, or mobile. Get started with $50 margins and commissions as low as 9 cents. Need support? We're available 24 hours a day, 5 days a week. Want to personalize your trading setup? Connect with our ecosystem of third-party developers building trading indicators and more. Visit NinjaTrader.com to get started today.
Better futures start now with the NinjaTrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets, and access over 40 built-in indicators plus custom indicators, all from your phone. Stay up to date at all times by enabling notifications. Get started today at NinjaTrader.com.
Join over 800,000 users who trust NinjaTrader as their futures trading platform of choice. Access the world's most popular futures markets and trade seamlessly across devices, including PC, Mac, or mobile. Get started with $50 margins and commissions as low as 9 cents. Need support? We're available 24 hours a day, 5 days a week. Want to personalize your trading setup? Connect with our ecosystem of third-party developers building trading indicators and more. Visit NinjaTrader.com to get started today.
All right, we are back. Let's talk futures. My name is Jim Cagney on NinjaTrader Live. Joining me from across the pond is my good friend, long-term confidant, Gavin Holmes from Trade Guider. Now, Gavin's getting his screen going right now, so he'll be with us in a second. But you guys have seen Gavin before, and he has the Trade Guider software. He's part of the ecosystem here at NinjaTrader, and is an expert, I would say. I think I could say this in Wyckoff, the Wyckoff method, volume spread analysis, identifying supply and demand zones, and all that stuff. So we're going to bring him in here in a second, and appreciate everyone's patience as Gavin pulls up his charts here. So hang tight 1 second.
I'm here, and we can talk. I'm just about to share the charts with you all. Seems to be a site issue on it, but just to welcome you all. I'm broadcasting from the New Forest National Park, as Jim knows, in the south of England. So quite a long way away from where Jim is. You're in South Carolina, right, Jim? So, or North Carolina?
South.
Quite, yeah. So I just want to, before we get into the charts, because I'm just bringing the charts up now, and that, I think that what I'm going to do, I'm just going to restart, and then you can see the charts. But I want to talk about a question you asked me earlier, before we get into the actual screens themselves. You asked about institutional trading, and I found some very interesting stuff on that. Now, first of all, I'm going to put up what I found, which I already knew, but what I found quite fascinating about what the questions were was I went back into I've got in front of me, which unfortunately my front-facing camera is not working, but I have the magazine of Wall Street in front of me, and it talks about the big money, they called it then. Now, you can call it institutional trading, you can call it all sorts of things, but...
Hey, Gavin, what year was that? What year is that, the Big Money magazine you're talking about?
Yep, okay, so I can tell you exactly. So it's version 27, and it was written by Richard DeMille Wyckoff. It was edited by Wyckoff. Volume 35, it was number 13. I'm not sure if that's a good omen. But it was written on April the 25th, 1925. Now, how on earth can some of the things that we've been hearing about in, the Wyckoff method, how can that be that 1925 is at all relevant? And that's a very good question. And I know I've had emails about it. Why is that actually relevant? And the answer is, it's relevant because it's happening right now, because we're seeing at the moment a big change in market movements around the world. I mean, we look at what happened with gold this morning. Now, while I'm loading the data up, I'll just tell you a little bit about what's going on. So there's a lot of stories at the moment about, trading Bitcoin, and there's lots of news in the BBC media about, okay, well, we know that Ethereum might do that, Bitcoin might do that. But what's interesting is we look at the chart, and as I share this chart with you, and hopefully you can all see it, can you see that chart, Jim?
No, it's not yet.
It says my screen is paused. So I need to probably unpause it. So let's just bear with me. That's probably, it's probably because we were trying to figure out an issue earlier. But anyway, I can.
All right, but hang on, Kevin. Just to go back, you said something interesting. This was 100 years ago. Right?
Oh, this is 120 years ago. Yeah,
120 years ago. That is an amazing amount of time when you think about the changes that have happened from a security, the introduction of new securities, and the introduction of technology that we have here today. These principles are principles that you still believe are valid.
Yeah, of course they are. Yeah, and if I was to read this to you, you would understand exactly what it means. Because in my book, you know, I've written 2 books, Trading in the Shadow of the Smart Money. And actually, Jim, I'll just ask you to do one thing. Well, I'm just getting, I can see what the issue is here. Can you put a chart of gold up for me?
Sure thing. Got it up right now.
Yeah, just put that up so people can see it.
I gotta share. Hang on, everybody.
Yeah, just share that
Right,
screen.
right.
Yeah, it hasn't got the VSA indicators on it, but I can see it on my screen.
All right,
Yep.
it'll pop up here.
Yep, you should all be able to see that.
All right, let's see. I'm shared, Kevin. I don't know if we can get that going or not. We'll be there in a minute.
Well,
yeah,
I
the thing about
I can see the screen, and what is probably a really as obviously I can't share my screen at the moment. I can talk about each bar. Now, you know, I'm a volume spread analysis expert, and that's what we do. But you've got candlesticks on here, right?
Yes, sir. And I could change it to whatever you'd like.
Yeah, just put the open or the high-low close. I don't need the open, just the high-low close. And this is probably the most challenging thing I'll do, is analyzing each bar for you and telling you what's going to happen. Because I've got my screen on the other screen here, which I can't share, but I can show you what each bar means. Now, there's a couple of things here that are totally VSA. And this is not with my software on there. I'm just going to read it bar by bar and show you the alerts that we get. And from a technical point of view, it's an ideal lesson. So, Cags, if you go to the far left and see that big red bar that closes on the low to the left, that's the one.
Yep.
Keep going back. Yeah.
Okay, hang on. Let me do this. But all right. So this one right here.
That's it. Okay.
Okay, that's April 12th, 2024.
Correct. Now that is called in Trade Guider, the volume spread analysis system, a trap up move. And it's the start of an area where the smart money start to distribute or sell. This is the bar, correct. Now I'm doing this without my Smart Center Pro, but I've got it on my other computer, so I'm cheating a bit. But the point is, it doesn't matter. If we're going to do VSA and Wyckoff, this is a great way to do it. And when Cags emailed me and said, can you talk about institutional money and how they move the markets, which is really the lesson for today, I probably don't even need Smart Center Pro. I can do it for you right now. So what happens, and what the misconception is that when high volume appears and the market's going up, that everyone's buying. So the buyers are in control. The institution is in control. But quite clearly here, it closes near the low of the bar. Now, it doesn't immediately continue up. So we must know something is wrong, that something is holding the market there. But then, Cags, if you mark the top of that red bar that you've got your arrow on and move it to the right-hand side where the green bar is, I'll explain exactly what that says in our software. And it's going to be very, that one. Go to the very top of the bar, and then move it to the left or the right to where the green bar at the same level is. It's the same level. Yep.
Right here.
Go up to the very top of the green bar. Keep going.
Okay.
Keep going up.
Oh, I see what you're saying. All right, this guy right here.
Yeah, that's it.
Okay.
Yeah,
right.
You got it. Yeah. Tell you what, we should start our own hedge fund together, Cags. We could do this together every day.
I don't know about that, but
Cags and Holmes, yeah. So you've got these 2 areas of resistance to upper price, and as we move forward, what we can see is price is going up. The volume is increasing, but it's closing in the middle of the bars. And at that top, which Jim has already showed you, you've got a close in the middle, next bar's down.
Yeah.
Now, I suppose everyone wants to know, and again, I'm going to try and share my screen, but everyone wants to know, well, what's going to happen on gold? Well, in Smart Center Pro, and again, if you I did a really good NinjaTrader event a week or 2 ago, which is on our YouTube channel, which shows this. And what we'll do is we'll actually show you exactly why the market's going to do what it's going to do. Now, we don't know 100%. No one can tell 100% Oh, it's definitely going to do that. And if you think you can, you're probably wrong. Now, let's see if we can bring up the chart. And can you see my screen now? Let's see if that works. I've just reloaded it. I think it's because, yeah. So here, let's just do the connection. Yeah, that's all there. Can you see the screen here, Jim?
I got to defer to Kevin on that.
Yeah, Kevin, can you see the screen? Okay, now you've got a blank screen at the moment because I'm just checking I'm connected. Now, if I put the chart up, for some reason it's not bringing the screen up, and I don't know why. So what I'm going to do.
Well, that's right, Kevin. We could just stick on my chart, and we could just keep walking. You're doing a good job at just explaining the gold right now.
Yeah,
so let's just stick it.
Yeah, go back to your chart. That's fine.
Yeah. So, but let me ask some questions too, though. So,
sure.
The candle here on the 12th. This would be Dan Gramza would call this a benchmark candle, right? It's clearly the largest candle around, right? It's the biggest candle around. It happens to be a red candle, but it's the biggest candle around. And as you pointed out, we closed toward the low. I would say maybe 20-25% toward the bottom, right?
Yeah.
So the next day we kind of rallied a little bit, but we closed at a similar price, right? And we didn't really close a lot higher until the next day. When we get to this peak high here on the 19th, where my crosshairs is, does that give us a clue to anything?
Yeah, well, yeah, and this is really good. Because I'll tell you why. Because there's no indicators here. All right, and I sell software with indicators, but this is exactly. And I'm going to quote from Tom's original book, which all of the NinjaTrader customers can get. It's called Master the Markets, but it was originally called The Undeclared Secrets That Drive the Stock Market. And when we're looking at a chart, what we're looking at is we're looking at data. We're not looking at the emotion of the market. We're not looking at conjecture about what might happen. We're looking at each price bar and what it's telling us. And this chart actually is a very good one. Because if, Cags, you can go to about 20 bars, I think, to the right edge where the green bar is, where that red bar, go right to the right edge where the green bar at the top is. It's really clear something's going on. That's it. You've got it. Now, okay. Let me read this to you. And let's forget for a minute green, red, buy, sell, all of that. Let's just look at some logic. I think this will make sense to everybody. The Undeclared Secrets That Drive the Stock Market was written by Tom Williams back in the early 80s. And this book I have in front of me, I'd love to be able to show you, but for technical reasons I can't, but I can still read it. This book, he says, will help you to understand the markets the easy way. Well, okay. The information will be a startling revelation to most readers. Newspapers, magazines, television, all of this will appear to give you authoritative statements on the latest market moves. However, you'll never be told the exact truth. Okay? Most traders give little or no attention to how the markets actually work because they believe they already know how it works. The market is simple, and he talks it in general here because it was written years ago. It works on supply and demand like any other free marketplace. If there is more buying than selling, then the market will go up. And conversely, if there's more selling than buying, then the market will go down. In principle, this sounds correct. However, in practice, it does not actually work exactly how you think it should. And one may fail to see the unforeseen forces that drive the markets. In his book, he says it not only explains to the reader why market moves occur, but also how to recognize the underlying forces, and that's a good word, that drive the market. You will also see how you can select individual, and in his case, it was stocks, for trading with limited information, but using the chart. Now, going back to that and what Wyckoff said, if we go to the right edge of the chart, Cags, to one of the bars there. Yeah, right there. Okay. Now, at the moment, this market, and we're going to go, and hopefully in a minute we can go to the Dow. But this is a daily chart. We're looking at daily bars. And we can see, it's like, and I talked about this earlier in my webinar, it's a bit like a snake. It goes up. I watched Steve Irwin. Some of you will know who Steve Irwin is. He fortunately passed away, but a great guy, the crocodile hunter. And when he caught a snake and let it go, the snake did not just go vertical and scoot away. It went sideways, came backwards, tried to bite Steve Irwin, and then went back up again. The markets do the same thing. Now, Cags, can you put a smaller time frame up for me? Can you put up say a 5-minute or 15-minute chart?
Easy. Hang on a second.
Yep.
Let me go. I'll do a 5-minute.
Yeah, absolutely fine. Okay.
Right, let me clean up my drawing tools here, just so it's not so messy. But me and Tom were doing some work this morning.
Yeah,
So
I listened in, so I know what you're talking about, and I want to talk about it because I think it's very important.
Okay, here's a 5-minute.
Okay, so can you get the candles off and just put the high-low close on, and I'll show you what I think it's a trade we took in the seminar I did earlier.
I'm going to go to. You just want high, low, close, right?
HLC. That's it. I don't do anything else. HLC.
Right. There we go.
Now we're not going to look at the volume for the moment because that's not on the chart. We could put volume on it. In NinjaTrader, you can put volume on there.
Yep.
But actually, what's quite interesting here is we have one of the key Wyckoff principles, which is called a spring, which I talked about, and I've recorded the earlier webinars. It's all done with NinjaTrader, so people can go back and look at this. But let me ask you, Eugene, where's the spring? You tell me where you see a spring, and let's see if I've taught you well. Well, have a look. It's a real obvious that's causing the upward move.
So, all right. So when I think of a spring, I think of, it's got a steady, a normal state, right? It's compressed. And then when you pull it apart, it opens up. And then when you let it go, it goes back to its normal compressed state. So I'm looking at this, I'm seeing kind of compression here, pulling apart the spring, and then compression again so far.
You've got it. You've nailed it. Now, if you look at the green bar 7 or 8 bars back, there.
Oops, sorry.
Yeah, that one there. Yeah. Here's how it works. This is pure fate. You couldn't pick a better chart. What happens is, in order to encourage the retail traders to go short, is they break the lows. Okay, so the market breaks the low. I've got the volume on the other screen here, so I can see what's going on. And what happens is, as it breaks the lows, many people will short that and say it's weak. But look at the closing price. Now, this is not with. I'm looking at it on my other screen, but this is not me analysing VSA indicators. I've got indicators to say that's a shakeout, which it is, but that's not the lesson. The lesson is it's
so Gavin, are we shaking out the shorts right now? Is that what?
Not yet. Not yet. No. It's going to go back up, and I'll show you why. But we'll come to that. And you couldn't pick a better chart. So what you've got, look at the closing price on that green bar that I showed you. It closed on the high, but both of them, and the bar behind. If that was selling pressure in the market, it would not move higher, which it's done, but it has to correct. The market does. I just did a really good event with Tiru Nagapan. I think he's going to be with you next week, and we had a very big audience, and we talked about this. I said, you've nailed it there. Look at where the closes are. Okay. And that is a 5-minute chart that we're looking at, right, in gold. And it moved much higher. Now, everyone's going to say, what's it going to do next? What you're looking for now is a test. A test. It's a Wyckofian experience. It's like, okay, the market's gone up. It's pushed higher. We've got the evidence. I hate to say it as an ex-policeman, but the evidence is behind us. Yeah, I know you laugh at that, but my wife laughs at that too. how can you be an ex-copper and then become a trader? Well, don't ask me, but this is going to go up, and we watch it. And
so, Gavin, hang on a second. Did you use the word copper? Is that like, is that slang in the UK for police officer?
Okay, I'll give you the history quickly as we're watching this go up. First of all, the actual slang for a police officer is called a bobby.
Okay.
I don't know if you knew that, but it's Sir Robert Peel invented the police force that I was part of for many years in both the Metropolitan and Hampshire Police. The word Bobby is short for Robert, right? So if you hear someone say, "Oh, the Bobby nicked me," or that's the quick thing. But copper, well, the cops. I mean, they have that in America, right? Cops.
Yeah.
In England, copper. But ultimately, the lesson I'm trying to teach people is, doesn't matter what vocation you've had in the past. I'm teaching pilots, doctors, but we've known each other years, right? And so you know my background. And at the end of the day, when you're trading, we're looking at, and this is really one of the greatest lessons I've done for a long time, because I'm not analysing this from a volume perspective. I'm looking at the price bars and I'm looking at the spring. And it's definitely in the book that I've got next to me written, well, as I said, April the 25th, 1925. I've got several of them. I'd love to show them to you all. Now, if you watch and again, I don't know how much time we've got, but you can cut me off whenever. But what we should see here now is a low, and I don't know, can you put volume on this? Because
easy, easy peasy.
Chuck the volume on. I'll show you what I'm seeing on the other side.
I was waiting for you to ask. Hang on, I'm just gonna give me a second here.
No, I deliberately didn't ask you because some people don't use volume, but now I'll show you why it all plays in. All
right, let me just format this a little bit. And panel, I think we're good. I hit apply and okay.
Yep.
And there we have, it's way at the bottom. I'll make the RSI really small so everybody could see it a little bit better. And I'll open this up a little bit more. So here are the volume bars, Gav.
Perfect. So you can see the increase in volume on the up bar. Now, what we're looking for now, and everyone wants to know now, they don't want me to go back and say, "Oh, well, that happened yesterday. That happened last week." And but any educator can do that. We should see a test here. And this will rally right through the top. Now, I can't possibly know this, can I? It's impossible. But it's
so what are we testing? What are we testing, Gavin? We're testing
the high volume bars in the background, right? So
I see. Okay.
Yeah. So again, this is a great question that you've asked, and I was asked in the previous course that I've just done. What is being tested? And then you asked me about institutional money. Well, I've worked with big institutional money, you know that, and I've talked to their traders, and they all have different systems. The one thing that's coming into the market right now is AI, right? And so I've been asked, is your system AI? I haven't got a clue. I don't. It's been around for a long time. It's not AI. Is your system automated where you can press a button and it just makes money? No. I don't think I've met anyone that's shown me a system that can do that. But is this market going to go up? Yes. Because the background, it's all about the past. And so the way, go ahead.
Yeah, Gavin, real quick. So I would think that most traders would think that when you see high volume bars, especially, at any point in the day, that they would come to the conclusion that there's institutional money coming in. That's why there's so much volume. Is there anything to that?
Yes.
Okay.
Yes. Yeah.
Because right now we have a baby volume. We have a baby candle. We have a little baby candle here, and we're getting close to the end of the 5 minutes. Right? It's the lowest one that we've printed for a while. And so in light of that, those two phenomenons, what's happening here?
Okay. You can't analyze the bar till it's closed.
Yeah. Okay.
So baby volume might turn into giant volume in 1 minute. My biggest mistake as a trader at the beginning was doing exactly that, where you say, "Oh, look, there's no volume on that. It's going to come down." You can't analyze it until it's closed. Wait till it closes. It's going up. I know it's going up. Okay. Well, it is going up because the background. Now, I'll give you the example that I've used in many seminars. Tom Williams would say to me, right, Gavin, you need to go and borrow money from a bank, which I've never done. I don't borrow money from banks. But you need to. You bank manager, you sit down in front of the bank manager. I need to borrow £1,000 or whatever it is to buy a car or do whatever. He said, right, Mr. Holmes, let's look at your background. How long have you been with the bank? Oh, 25 years, sir. Have you ever had a loan from our bank? No, sir. Why are you applying for a loan now? Well, because I desperately need a vehicle because mine's broken, which it hasn't, of course. But then you go for the... And so Tom said, the bank manager looks at your background. The background is in this chart right here, factually. Since we've been talking, it's going up. Now, if you're making a trading decision, and Cags, you and I know this from going back a long time, and Tom Schneider the same, that when you analyze a chart and you're doing it in real time, you can be right or you can be wrong, or you can be neutral. But the one thing that is definitely certain is if you're wrong, you get the hell out. And I use the analogy of Trade Guider being like a pilot's guide, because Tom, is a pilot. If he gets in his plane, he doesn't just jump in the plane and go, oh, I'm just going to take off. It's going to be great. It's a NinjaTrader plane. I just get in and it just takes off. He doesn't do that. He goes, no, I'm going to walk around the plane, check the propeller, check this, check. Exactly. Why is this going up? How can I possibly know it's going to keep going up? Because the background, you've got a spring. And I've got no VSA on this chart, which is even better, actually. The fact that we've had a technical problem for me is actually better, because now we're doing Wyckoff. Wyckoff didn't have signals. But does the signals and the indicators make a difference? Of course they do.
Okay, but Gavin, yeah, we still have a couple minutes left, but let me ask you this. At what point do you say, all right, well, look at that. I got to say, you're right. But at what point do you say, all right, the energy that's released from the spring is dissipated now and I'm no longer bullish?
Great question. And I'll finish on that. And then people can go and get the book. It's all, they're happy to have, I'm happy for them to have it. Very simple. The opposing principle happens. You've got very strong buying on the down moves. Look at the volume on the down bars. You've got the spring that we've explained. There's no indicator here. Okay. We've got the test, which I can see it. And it's in my system. But then more than that, it's built energy, and everything about humanity is energy. We're all energy. So charts are energy. Why was that going to go up? How can I be so certain? Because of the energy in the background. It's accumulation. And if you read the Wyckoff books, which I've got, he talks about accumulation and distribution. This has been accumulation at that low. And then it pops up just like you've seen. And if you've got our system, which unfortunately I wasn't able to show my screen, but it didn't matter. This has been the best that I could ever do, is analyze bar by bar. We've got a system that scans it and says it's about to move. Now watch. And then I'm going to finish in a second because I know you've got another guest coming. But the markets move on 3 universal laws. And if you've got it, you've got it. It's supply and demand, cause and effect, and effort versus result. The cause is in the spring that you've identified. The effort is what the price has done while we've been talking. And it doesn't matter about indicators because, yes, it's easier to scan for this, but that is how the markets work, Jim. And you know that, I know that, Tom knows that. And obviously we had a technical issue today, but this has probably been the best event I've done because I'm not using our software, although I am on the other screen, because I can see that had to go up. Over to you.
Gavin, always great talking to you. I appreciate it. You can be found at tradeguider.com, right? Tradeguider.com.
Mm-hmm.
And your book, Trading in the Shadow of the Smart Money, easy peasy. Find it either on Amazon or on the website, correct?
Yeah. Amazon.com. Just type in Gavin Holmes, Holmes, like Sherlock, ex-policeman, Detective Holmes. Yeah. You got it. Easy to remember.
All right, Detective Holmes. Appreciate your time for sure. We'll work out the visual bugs at another time. So looking forward to talking to you again, Gavin. Have a great day. All right, coming up next, we have Jose Blasco with Tom Schneider. We will be right back.
So, you want to be a trader? Well, you should know you're not alone. Over the past several years, record numbers of people have set up their very own online trading accounts. There's never been an easier time or more inexpensive way for do-it-yourselfers to get started trading the financial markets.
Better futures start now with the NinjaTrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets, and access over 40 built-in indicators plus custom indicators, all from your phone. Stay up to date at all times by enabling notifications. Get started today at NinjaTrader.com. Technical analysis made easy, a starting place for new traders. When do I place my trade? Where do I set my stop loss or profit target? All good questions that traders need to answer on a regular basis. One of the ways traders get to those answers is by using technical analysis in a historical price chart.
Join over 800,000 users who trust NinjaTrader as their futures trading platform of choice. Access the world's most popular futures markets and trade seamlessly across devices, including PC, Mac, or mobile. Get started with $50 margins and commissions as low as 9 cents. Need support? We're available 24 hours a day, 5 days a week. Want to personalize your trading setup? Connect with our ecosystem of third-party developers building trading indicators and more. Visit NinjaTrader.com to get started today.
Better futures start now with the NinjaTrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets, and access over 40 built-in indicators plus custom indicators, all from your phone. Stay up to date at all times by enabling notifications. Get started today at NinjaTrader.com.
Join over 800,000 users who trust NinjaTrader as their futures trading platform of choice. Access the world's most popular futures markets and trade seamlessly across devices, including PC, Mac, or mobile. Get started with $50 margins and commissions as low as 9 cents. Need support? We're available 24 hours a day, 5 days a week. Want to personalize your trading setup? Connect with our ecosystem of third-party developers building trading indicators and more. Visit NinjaTrader.com to get started today.
Oh, it's me. Welcome back to NinjaTrader Live. I'll be your host, Tom Schneider, CMT with NinjaTrader. And on this segment, Traders Workshop, we like to bring in our NinjaTrader ecosystem partners to talk about their expertise. Today is no different. We welcome back co-founder or founder of Tradictive with the UFOs, Jose Blasco. How you doing, Jose?
Hey, everybody. Pleasure to be here. I'm doing very well. How are you all?
Yeah, no, it's great. I love your background, Jose. I just, can you explain it a little bit?
Just a little bit of, trading, quantitative field, artificial intelligence, tech, a little bit of a feel like that in the background. I like it.
Oh, it's great. It's great. It's great artwork. So, Jose, you've been on a couple sessions where we've been talking about identifying, which way we should trade, possibly, getting in there with a little bit of a plan, and then our entries. When I think of a trade, I think of, 3 elements, entries, exits, and risk management. So I think today we're going to focus on exits, right?
Correct. Let's do that. I mean, each component you mentioned is absolutely critical, and exits, it's something that many traders don't think about it like it's that important. I think we can have a good conversation about that today.
Awesome. Great. And Jose, where are you calling in for those who have not seen you before?
Singapore, this part of the world, 12 hours away from New York time zone. So it's exactly the same time as New York. You just need to change AM, you make it PM.
2 p.m. Right. Yeah. And we're thankful that you can come on here, especially at such a late hour. But I know you follow the New York markets, right?
It's market hours, so I am around. Yes, I do well during the evening hours and the nighttime. Much better than early morning. I'm not a morning person.
Well, the job found you then. Yeah, so let's jump into it. I'm watching your screen, Jose, and it's active. So maybe we can look at kind of see how you're using your indicators, how you're using the charts and NinjaTrader to find those exit points.
Yeah, definitely. I mean, you kind of mentioned it a moment ago, and the way you said it is kind of like the sequence. You first of all, the way on how I look at trading, I think about, is it time to trade, yes or no? And if it is, do I want to go long or short? That's the first type of, just summarizing it very much. This is kind of like the first question I need to answer for me to get ready to plan on a trade. Which direction? Is it time to do it or not, and which direction? So for that, here in the bottom left part of the screen, I am utilizing a tool called Auto Climate, which is giving you some indications with blue and red colors, which in a moment I will discuss with more detail, because we are talking about exits today, and understanding the climate also tells you a lot about when to exit. Typical example: the trend is your friend until it bends at the end. So again, thanks to tools like AutoClimate, with the things we can do with a NinjaTrader platform, so you can get statistical data about price movement and be able to conclude if statistically you are reaching the end of a move. And that would be a powerful indication to know that it's better to take profits than to stay in the trade. But anyway, I'll come back to that. So step one, if you wish, identifying the market conditions. So it tells you if it's time to trade or not, long or short. Once you are in that position that if you want to go long or short, then in the last conversation we had, we talked about the entries and how to get as precise as possible, because that has a direct impact not only on win-loss ratios, but also reward to risk ratios, and therefore the impact in performance is right there. Today we're talking about exit, which is kind of like step 3. So you have a market condition that tells you time to trade. You have found an entry that meets your rules, which is a high probability precise entry. So then what? Okay, you get into the trade, but before you do, you better know where to exit, because first thing I will say about the exits is, if the exit is too close to your entry, the trade is not worth it. If you're risking 5 points to make 2 points, so what's the point? sorry for the very bad joke.
No, that's a very good slogan, I think. Good question to ask that way. Yeah.
Yeah. So kind of like, zooming out, big picture, this is kind of like the mindset, or the steps, the process, that I would go through to identify a trade. And again, so many more to talk about exits, especially today. But yeah, that would be my first answer to your question.
Great. So right now we're looking at charts of, looks like the E-mini S&P. What in terms of those first 2 questions to get to the exits, what would you do looking at the market today and say, Auto Climate tells me this, and then the charts tell me where I should get in? And are you in a position now, or where would you be in?
Very good. So yeah, so the market condition, again, coming back to what I was saying before, this is, by the way, the S&P 500 on a 15-minute time frame. So this is designed to be fairly active in an intraday trading type of style. The same thing I am about to go over with a 15-minute time frame. If this was to be done on a 1-hour time frame, 4-hour time frame, daily time frame, if you go up into the ladder of time frames, you just become less active. But the rationale and the concepts I'm going to discuss with the 15-minute time frame apply to everyone, really. So on the 15-minute time frame, I am looking here. Maybe I'll make this chart, full size for now, just so we can focus on that. So on this 15-minute time frame of the S&P, we can see how we have a thick blue dot, which that, based on how Auto Climate works, means you have a confirmed market condition to go long. So in other words, you have a market condition that invites based on my rule set to go long. Now, is it still time to do it or not? Or, is there any contradictory piece of information that stopped me from doing it? Well, let's see. It says here that a normal thing to happen when the market goes up is that it moves in waves of 10 candles at a time, a duration of 10, the count, 10 candles, 15 minutes each. And right now, this is candle number 3. So in other words, from a time duration point of view, this movement to the upside could certainly last longer. Up to 10 would be a normal thing to happen. Like, for example, this blue climate here that took many, many dots, actually more than 10 in this case. But 10 is a 1 standard deviation, a normal thing to happen. From an extension point of view, if you wish, the concept of too far, too fast, the definition of too far, too fast is 2.09. So 2.09 ATRs above this golden line, which is a moving average, would be defined as too far, too fast, and therefore potentially not sustainable. So far, this market condition has been extending a maximum of 1.6 ATRs above the average, which means that we didn't reach 2.09. In other words, this market condition, while it's a pretty strong move to the upside, it is not outside realm of possibilities. It's a normal move, which didn't extend past the max distance parameter and didn't extend past the count parameter. And therefore, we are in a market condition which invites to be a buyer. So now that I answer my question number 1, and I'm willing to be a buyer, then the next question is, okay, what price am I going to enter, right? And this is now when I look at the charts on the top, where I have a 2-minute time frame of the S&P, at 2,584 volume bar. This is a Fibonacci number. And I also have a 1,597 tick chart. That is another Fibonacci number, just like 2 is also a Fibonacci number.
Right.
So, like Fibs, just in case it was not obvious. And in this case, I am running different timeframes on the same symbol, which is the S&P futures contract. And I'm running a technology that we call Auto UFOs, which is another tool that we provide for the NinjaTrader platform. Auto UFOs is right there. UFO stands for on-field orders. And basically, all those flying saucers are telling us that we have on-field orders to buy in those price levels. Now, that is many UFOs, many green areas, green zones, green bands, however we want to call it. If all of them were opportunities to buy, would be buying all day long, or if it was a shorting opportunity, shorting all day long. So could you be extremely active and take every single trade available on the chart? Yes, you could. I am more of a conservative trader. So instead of shooting for quantity nonstop, I shoot for a good balance between quantity and quality. So how do I find the balance? Well, the other day we talked about this moving average on the 15-minute time frame, which I did transfer as a horizontal line on the upper charts. And that horizontal line on the upper charts, which is located at 5325.95, notice that in certain locations, it's lining up with UFOs. Right there, and right here. So what would I do? Well, I would ignore all the UFOs that are not lining up with the golden line. Why? Because that way I am forcing myself to wait for pretty decent pullbacks into an average like here to potentially catch a move that extends more to be able to have my exits further away, which is the topic for today, the exits. So one way to improve your exits, it's, to buy or short after you have a decent level of correction following an impulse. Because if you are buying in the middle of the impulse, of course, you may collect a very, very nice profit. But again, an impulse may be a market condition, which is those conditions where the market is moving too far, too fast. And therefore, they may not be sustainable. So you may catch a nice initial profit, but then it turns against you. So in my philosophy on how I trade, I define myself earlier a bit more conservative, if you wish, in the sense that I'm waiting for this healthier pullback, which in this case would mean I would ignore, let me get my mouse in the right place. I would ignore that UFO, that UFO, that UFO, and I would be placing orders to buy at 53.27. So I would want to wait for a decent retracement before I get in.
So great points there, Jose. One thing I think to clear up maybe is when you say impulse, we're talking about waves, right? We're talking about movements. I'm looking at your 2584 tick chart, and I see some impulsive waves, meaning we're in an uptrend. The impulsive wave would be in the direction of the uptrend, and right now it looks like we're definitely in that impulsive wave right now. And so you're going to say, well, wait a minute, let's wait for a pullback, not just to the nearest UFO, not to the biggest UFO. We have to go back to where there's confluence of other indications. In this case, moving average from what is that, a daily moving average, I think?
It is a 15-minute time frame moving average.
15 minutes. So it's the 15-minute moving average that you carried over to other charts, and that can act as support.
Correct.
Okay.
Correct. Yeah. So so this is the rationale to get into the trade, right? Now, the exits, which is the other part, which is extremely important, because if let me throw a question out there to the audience so everybody thinks about it. The question would be, have you ever been in a trade where the market moved your way by a certain amount, next thing you know, turned against you, and you ended up stopped out? Right. And that's a very generic question. And I'm sure everybody's saying, yes, this happened to me, because of course this happens to everyone. So this basically, I'm asking this question for everyone to realize the importance of setting exits in the right places, because if your exits are well located, the probability of finding yourself in a profitable trade and then end up in a losing position, then is going to be less, because you exited at the right time. Just like entering at the right time is critical, exiting at the right time is also very important. The other side of this question, which I would also like to throw out there for everyone to think about it, is, have you been in a trade? Have you ever been in a trade? You got to your target, you exited, and then the market kept going and going and going. And if you had stayed, you would have made so much more. And of course, the answer is, everybody is thinking, of course, this happened to me. Right. And by the way, no one has a crystal ball where you can be like millimetrically precise for every entry and every exit for every single trade for the rest of your life. There is always a little bit, let's call it wiggle room, where it's okay to enter a bit soon, it's okay to exit a bit soon. As long as you are not leaving too much money on the table, as long as you have some decent level of precision, it's fine. We're not going to be able to predict the future like perfectly. So it's okay to be a bit more relaxed about it, but at the same time, the more precision we can add to entries and exits, it's going to make a massive difference on the average reward to risk ratio for a trader. And therefore, at the end of the month, at the end of the year, the difference is amazing, right? So exits, it's something very critical. And today, we had, for example, a very, very interesting case, which it's actually a great coincidence because it allows me to explain something very important. So, for example, if I go back here to this chart, and we pretend we are back in time, let's say a couple of hours ago. So this was the time when the S&P started falling hard. That was a pretty decent move from the 2530s to the 20. I'm not sure whether I said that number, 5330 to 5305, more or less. This is like, let's call it 30 points or 25 points drop in 30 minutes to 45 minutes. That's pretty decent. It's a peak of volatility, which is not bad. So what happens at the moment in time is that, on the way down, on top of that, we got indications with the auto climate on red color where it says, okay, the climate is confirmed to go short at that time, right? So you have very powerful move to the downside. The climate is telling you go for it, right? But what's the issue? Okay. By the way, the statistical duration of a down climate is 4. So actually, you would expect it to go for 4 dots at least instead of 3. But what's the issue at that time? Well, the issue at that time, if I look at another chart I have here on the upper left, maybe I would zoom in and that would be seen better. So at that time, this drop ended up inside of a green UFO on a 15-minute time frame. So on a larger time frame, because we are trading the 2-minute time frame here, right? So on a larger time frame, on the 15-minute time frame, while the climate was telling you the market is moving down and statistically it's going to last more, well, the fact is that you had a very strong support. Very strong support. So, taking profits instead of hoping for the move to behave as normal would have been an intelligent way to act on it. Just like right now, I mean, I'm saying, I said it a moment ago, it's just a perfect coincidence. Look at that. We have this amazing move to the upside where this is going parabolic, like it's going to the moon. But what did we just hit? We just hit a red UFO. When a minute ago I said we are still in a climate condition where we are into a situation where the climate is blue. We have been 4 candles into the climate. The statistical duration is 10. So it should keep going. But what's the issue if you don't take profit now? Well, the climate may reverse violently and may not meet the statistical figures that we have on the screen. Why? Because you have a very strong resistance at the current price point.
So
in other words,
those unfilled orders could be a place where you do experience resistance if they're red, support if they're green.
correct.
And it might be hard to get through those levels because they're basically chewing up orders, right?
You are correct.
Yep.
That's what it is. So, as a trader, and by the way, let's say I am wrong, and this market now, instead of correcting the way I was saying, it's to me more likely than not to happen. Let's say the market continues. Okay, well, no problem. Let's be patient as a trader. And when it comes back to, a future average right here, just get ready to get back in and ride the next move. Because again, the market sooner than later, because of profit taking or because of unfilled orders, we can see, if I zoom in the screen here one more time, sorry, because some of the things are a bit small, but we can see here how price went inside and now it's coming down. It dropped a few points already. So this is one of those cases where, let's say we have taken a trade with one of the upper UFOs that we had on the chart without waiting for that healthy retracement I was talking about. And now you see the market moving your way 1, 2, 3 points, and you are, very satisfied with the beginning life of your trade. But next thing you know, it turns against you and stops you out. What was the problem? Well, the problem is that, there was a very strong resistance. In this case, I use the term resistance to make it kind of universal. Normally, I call it UFOs, unfilled orders to sell, but it's the same thing if you wish. So it's important to understand beyond what is the market condition that invites you to go long or to go short. It's also important to find out in a larger time frame if there are threats that may stop what a normal move in the market would be. Normal in this sense, I mean, based on statistics. Based on statistics, a normal move to the upside would be 10 candles on the way up on the 15-minute time frame at this moment in time. Well, yeah, that's great to know as a reference, but what is the market is giving you today as an opportunity, right? And you can see here, for example, how price is now trading through this green UFO. So the push to the downside is now being significant, whereas buy on field orders are being filled completely and the price keeps going down. So again, we may end up having a complete change of climate here. And it's all starting because of that red UFO on a larger time frame. So
Jose, real quick, and question, I see a lot of UFOs on these charts, more than I've seen basically in other sessions we've done.
Yes.
Right. And it seems like there are a lot of, in an uptrend, we might see that where there's some wave action, there are these impulsive waves and pullbacks, etc. Do those unfilled orders represent canceled orders that get moved up with a trend, whether these are stops like trailing stops, or are they an amalgamation of all the unfilled orders that could be replicated when chasing the market, right? Is it something we see in a trend, I guess, more than, let's say, consolidated markets?
Yes, the typical behavior that we observe all the time and very clearly is that in an uptrend, which I normally call an up climate, so you see buy orders being added. So you see many of those UFOs, like for example, earlier, as I said, since like an hour ago, 2 hours ago, 2 hours ago, the market kind of went down very heavily. And then since an hour ago, the market is going up, right? So during this 1 hour, plenty of pockets of buy on field orders have been added to the market. That's why all of those green UFOs are here, as you said, perfectly said, we have plenty of UFOs today on the chart. Why? Because the move to the upside was very violent on the way up, and therefore many new pockets of buy and fill orders have been added. This is picked up by the technology and is plotted on the chart. If the market was a bit more quiet on price movement, you would see less UFOs. And if the movement wants to the downside, what you would see is red UFOs instead of green UFOs. So something that I always mention when I'm teaching a class, for example, I always mention that in up climates, buy on-field orders tend to be added while sell on-field orders tend to be canceled. And in a down climate or downtrend, sell on-field orders tend to be added where buy on-field orders tend to be canceled. Sorry to say that because it sounds a little bit confusing maybe if I say it too fast. But in the end, that's how price moves. For price to move higher, buy orders need to be added because the buy orders will remove the sell orders.
Right.
And when no sell orders are left, price has to move up.
There's no obstruction. Right. And that makes sense, right? It's kind of chasing the trend.
Correct.
Yeah.
Correct. So talking about exit, which is the topic for today, even though of course it's all very much related, we're talking about market mechanics in the end. So a big lesson that is very visual today and is very nice to see is that while it's very important to set your entries and everything else, we should also always keep an eye on larger timeframes to whichever time frame you trade. Looking at larger timeframes would also make you aware of where, you know, the significant moves may start or stop. And therefore, you know, you may be in a trade that makes a lot of sense, but you better take profit because maybe you're going to have a complete change of trend against you. So it's very important to have that in mind because the job of a trader, you know, it's a typical, you know, quote that probably all of us have heard before. You know, our job as traders is to cut our losses short and let our winners run, right? It's the in the perfect world, that's what we all do. But how do you let the winners run? Well, you don't want to do it out of hope. You get into a trade and you hope, keep going, right? So that's, I mean, yeah, of course we hope, we are human beings and we cannot, I guess, control our emotions 100%. But it doesn't make sense to put yourself in a situation where you only hope, where you don't have any element that actually helps the trade in the form of an edge. So what's the edge? Well, in this case, the edge is being in a market condition that statistically speaking is telling you, you know, like in this case, 5 out of 10. So the market may keep moving in that direction. So then stay in the trade, let the profits run. But also, if the market is hitting a very strong support or resistance, especially from a larger time frame, in my case, support and resistances are UFOs. So if the market is, no matter the market condition, if the market is hitting a support or resistance from a higher time frame, yeah, well, I would say pretty good idea maybe to take profits and, you know, wait for the market to define itself and start planning new trades, maybe in the opposite direction if the market proves itself in the opposite direction. But that's not the time to let the profit run because you are hitting a very strong support or resistance, in this case, UFO, in a larger time frame.
Right. Yeah. You know, what I really like about this, Jose, is the the basics. It's based on basics, right? It's based on market mechanics. It's not just about technicals and patterns and all that. It's really looking at, you know, what's happening in the order book. And yeah, there's a little bit of technicals with your Fibonacci number tick charts. I like that as well. By the way, just quick question. We have a little bit of time left. Those tick charts that you have, they're big Fibonacci numbers. Do they kind of correspond with, let's say, a 1 minute chart, a 30-second chart? Is that what you're
2
going
minutes.
for there?
2 minutes, yes, correct.
2 minutes. Okay.
Here, for example, if I was to change to something very different, for example, Euro futures, why am I saying very different? Well, because it's much less liquid than the S&P, even though it's very liquid. So then what I would do is I have my tabs here, which I am clicking as we speak. And where's my mouse? Okay, here. And notice that now for the Euro future, I'm using 233 ticks and 377 volume bars instead of 2,584. Why? Because, you know, Euro futures is much less liquid compared to S&P futures. Again, it's super liquid. What I mean is the volume traded per day is much less. And therefore, the equivalency, that's probably the right word to use, the equivalency of a tick or volume chart versus a 2 minute chart, which is time-based. So it's more adequate by using a different configuration. If I was to do crude oil, for example, so then I would use, as you can see here, 610 volume charts and 377 tick charts. Also fib numbers, but you can see how I'm moving up and down the scale depending on the average daily volume traded per for these markets. Which
That,
are obviously
you know, that's fascinating because it's automatic. You know, Jose, time goes way too fast. I'm glad you could join us today. And, you know, you're staying up late, but you're up anyway, right?
yes.
Appreciate you coming on as always. And I think we'll look at risk management or tying it together next time, correct?
Yes, correct. That's the other component you mentioned, isn't it? The risk management, it's critical because, again, we will not always catch the right entry or the right exit or the right climate. So what, you know, how do you control your risk in those worst case situations? So a very important conversation to have.
Awesome. Great. Well, thanks again for coming on. Up next, we'll be taking a quick break, but we'll bring Jim Iorio back in with Jim Cagnina. Stay tuned.
So, you want to be a trader? Well, you should know you're not alone. Over the past several years, record numbers of people have set up their very own online trading accounts. There's never been an easier time or more inexpensive way for do-it-yourselfers to get started trading the financial markets.
Better futures start now with the NinjaTrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets and access over 40 built-in indicators plus custom indicators all from your phone. Stay up to date at all times by enabling notifications. Get started today at NinjaTrader.com. Technical analysis made easy, a starting place for new traders. When do I place my trade? Where do I set my stop loss or profit target? All good questions that traders need to answer on a regular basis. One of the ways traders get to those answers is by using technical analysis in a historical price chart.
Join over 800,000 users who trust NinjaTrader as their futures trading platform of choice. Access the world's most popular futures markets and trade seamlessly across devices, including PC, Mac, or mobile. Get started with $50 margins and commissions as low as 9 cents. Need support? We're available 24 hours a day, 5 days a week. Want to personalize your trading setup? Connect with our ecosystem of third-party developers building trading indicators and more. Visit NinjaTrader.com to get started today.
Better futures start now with the NinjaTrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets and access over 40 built-in indicators plus custom indicators all from your phone. Stay up to date at all times by enabling notifications. Get started today at NinjaTrader.com.
Join over 800,000 users who trust NinjaTrader as their futures trading platform of choice. Access the world's most popular futures markets and trade seamlessly across devices, including PC, Mac, or mobile. Get started with $50 margins and commissions as low as 9 cents. Need support? We're available 24 hours a day, 5 days a week. Want to personalize your trading setup? Connect with our ecosystem of third-party developers building trading indicators and more. Visit NinjaTrader.com to get started today.
All right, everybody, we are back with our star-studded lineup for today. Joining me live from Chicago, Illinois, James Iorio. Jimmy, how are you?
Good, Jim. How are you? I appreciate that you say Chicago like it's still a good place. If you guys weren't listening to the conversation we had just before we started, they were dogging Chicago. Me too, and Illinois. But here we are.
Great place to visit.
Yes, yes.
We'll put it that way. So, all right. So anyway, so we're doing a different time. Accidentally, maybe we're in a different time zone right now. We do a midday wrap up, but that's pretty much what me and you do anyway. We kind of look at the charts and kind of do some wrap up stuff. You sent me some interesting notes today to think about on some of these key markets and some of your opinions on those. Let's start with the equity market right now. I have an E-mini S&P daily chart up right now.
Okay, up until today, I was relatively negative, and I'll tie this up in a second. But one thing that made me negative on the stock market was that Friday, Monday, and realistically Tuesday, we got bad data. We got the 1.3 GDP. We got the ISM numbers on Monday that weren't good at all. And then we got increasing talk of the Atlanta Fed GDP now model, which went from 4.2% to estimating 1.8% GDP in the span of about 2.5 weeks. To me, that's alarming, and it shows me that all the people who've been screaming about recessions for the last year, myself included, are soon going to be right, is what I think too. So what I thought was going to happen, because when those numbers came out, you'd expect the stock market to go higher, because historically they went higher based on the fact that we'd be pricing in lower rates, which we did price in lower rates, and the stock market did not look very good until today. So now today is funny is that today's numbers were kind of sanguine. Some were above, some were below. And I think the market liked to put off the notion that things are cracking, and that's why we're plumbing the highs right now. That being said, from a technical standpoint, you have that chart drawn up right there. To move past that is going to require some heavy lifting. I'm not sure it's going to be done on the first try. What are your thoughts?
Well, you know, like you said, we have the GDP situation is starting to get closer to zero, right? Even the New York staff Fedcast, they call it the New York Fed staff GDP now version of their calculations, also at 1.8. Recessions happen all the time. It's inevitable. The question is when? Is it going to happen next month? Is it going to happen 5 years from now? Mm-hmm. So that's kind of in play. The ISM numbers, services numbers came in strong today. And prices paid were a little weak today in that report, which surprised me after yesterday's
that's when I read that.
as well.
I did buy for a day trade. I bought S&Ps. I'm out of it now just before I came up here. Yeah. But I wanted to play from the short side. But as soon as I saw the lower than expected prices paid, I thought that would be the fuel for a short-term rally.
Yeah, no, I agree. So just again, I think, like you said, we're approaching this area of resistance. I have a rectangle there kind of showing that area, just kind of graphically represented at around 43.50, give or take. And the other thing that's going through my head, and I'm interested in your opinion on this, is there seems still to be a lot of idle investment capital laying around, and folks might not want to miss a breakout.
So here's what I think about that. So on one hand, when you see what's happening in meme stocks like GameStop, that to me is an indication there's excess liquidity in the system. There's excess money, dry powder, as we used to say. However, dry powder is not the same as it used to be when you're getting 5.25 on your 3-month money. There's a lot of people who are very, very content, who are somewhat invested in the stock market. I'm not saying there can't be a FOMO rally if we go above that rectangle there, because there could easily be. But I don't think it's written in stone like it has been in the past when rates were zero and any money that was on the sidelines was not performing for you.
Yeah, that's a good point too. But what about the flip side that maybe yields are starting to come down a little tad bit? I mean, right now, let's see if I got the 10-year micro yield up here. We're tracking 4.29.
Yeah, they've come down significantly. Considering they were 4.63 after those two poor auctions on the 28th. 29th, that was just a week ago, and we had the 10-year at 4.63. So now, to me, there's no question that yields are coming down because the market has seen a slew, some of the data today notwithstanding, a slew of weaker than expected data. And then you look at the ADP, which came up below expectations today. The big number comes out on Friday, which again, if you look under the hood of the BLS NFP numbers over the last year, maybe even year and a half, they are not nearly as good as the headline suggests. Deep down, they're government jobs, healthcare jobs, education jobs. These are all non-productive jobs, very necessary. If anyone's listening saying, well, he hates healthcare. No, I love healthcare. They're not productive jobs, though they don't produce. And this has come a problem. Our economy is going towards second and third jobs and those jobs. And I think that the bottom is going to fall out of that relatively soon. But there is one more bit of whipped cream I'd like to put on the whole Sunday too, is the $35 trillion, the $1 trillion in additional government debt that's accrued every 100 days now. And now we're getting to the point where we have to borrow more just to pay debt service on what we've borrowed in the past. And it just keeps saying the Billy Joel song, is that all you get for your money? And I'm talking about the 1.3% GDP, which I don't know, it seems like they could shop in a better store and get a better bargain than spending 35 trillion and getting 1.3.
Do you think that's maybe why the Treasury is kind of heavier on the shorter term debt issuance than the longer term?
I think it's absolutely why they're heavier on the short end. I think they're scared to go out further. I think the Fed is scared. That's why on May 1st, they dialed back quantitative tightening from 35 billion a month to 25 billion a month, because they don't want to be selling longer end bonds along with the Treasury if the Treasury is having a hard time getting their trade off.
Yeah, and I think you told me that M2 money supply is where it was a year ago.
It's actually higher than it was a year ago, marginally higher, but it's higher. So think about it, the Fed is trying to pull liquidity out of the system. At the same time, the government is just throwing money wildly into the system. To me, this is the weirdest push-pull I've ever seen. It's two just diametrically opposed forces. And the only thing I'm certain of is that it ends badly. But again, that's worthless. I think it's going to end badly if you don't know when it's going to end badly. So now I think there's going to be cracks and fissures that are obviously evident within the next 2 months.
So just so you know, Jimmy, as a side note, talking to you is like talking to my brother. You two are like two peas in a pod on all these issues. It's great.
Is it a good thing?
Oh yeah, for sure.
Talk with his hands a lot. You get way too passionate for the moment too.
Yeah. Well, we're Italian.
We're Italian. We do.
Yeah. All right. So this is the equity market, right? We have a ton of great CME Group asset classes we could check out. I want to go to gold really quick because this is also, I don't know if I'm surprised by this, but I'm surprised by its resilience. Let's put it that way.
Okay, and it's one of the only ones of the metals market that have been relatively resilient today, particularly. I think that's telling us something. Now, I know we don't have the Bitcoin chart up. I'm just going to mention it casually. Bitcoin has gone somewhat through the roof as well. Now, there are some people who say that's a function of liquidity, just like GameStop. There's others who say that it is a dollar hedge, just like gold. I prefer the latter explanation. I think if the economic data is really deteriorating the way I think it is, what happens then is that the Fed is going to stop quantitative tightening, maybe even reverse to quantitative easing, because then they'll kill two birds with one stone. They'll be injecting liquidity into the system. They'll be making it easier for the Treasury to sell their bonds too. In that case, I think gold could shoot significantly higher. The fact that gold has performed well today, I think, and taken out all of yesterday's down move, to me is extremely encouraging. Does that make sense?
Yeah, it does. I mean, from a technical pattern point of view, we're like, this is maybe a bullish engulfing candle driving up to, I think the next step is this target wick up here at 2387.
That's what I believe too. Let's go to like a 60-minute bar and see where we trade it.
Let's do it. 60. Wow, look at that.
Yeah, I missed it already, right?
Yeah.
Missed it already.
Yeah,
well, a retest back to that level, that's where I'd maybe try to pick it up. Which, by the way, for people watching, most of you guys know I am long gold up to my eyeballs. So I'm probably not going to be trading it. If I was ever going to be trading it, I'd be looking for shorts to trade around my long position. Wow, yeah, I think a retest into that circle and then a move back out of it is a spot to buy it. Let's go a little longer term and see where our objective could be. Maybe a 240-minute bar.
240. Yeah, I got. Oh, look at that. I have one.
Look at a 240.
I haven't clicked on that button in a while.
Yeah, but it doesn't. We have to go to the daily to get because it doesn't have the whole.
Okay.
The contract.
I don't have enough data. Right. All right. So let's go to daily. All right, we're back there.
Yeah. So what's the high of that red candle and the green wick from about 5 days ago? Right around there. What's the high
around here?
Yeah.
Yeah, that's 2387.
Okay. Which again, not a huge deal, small from here, but I think that's my first target. But the ultimate target would be all-time highs again, too. Something about the gold trade that I know I said on here before, I'd like to say again. We talked about between 1,800 and 2,000 for several years being the new range. Okay, we factually devalued the dollar by about 30%. It is only reasonable to think that the range for gold dials back up, you know, at the very least, somewhat of that amount, which would be like 2,250 to 2,500 on the upside. Then you add the fact that globally, central banks buying gold, the demand for physical gold is quite high, and I think that that could be the thing that pushes it. Gold is still one of my picks to click.
That's funny you should mention that. Me and Tom were talking about this morning. Is why a 1 ounce silver coin cost $40 when silver's not anywhere near there.
Well, it is funny because I go to the gold store. And again, if any of you guys want to come and try to rob my stores of gold, if you get past the dogs, you wish you hadn't. But anyway, so I go to the gold store and like you got to buy. They'll buy from you at like $60 over spot right now. So you go into the gold store and you have gold. So it's not just like it's a wide spread that they're trying to scam you. They'll buy from you over spot. They'll sell to you at way over spot. But I think that is really indicative of the price of gold, the real price of gold, the not paper price.
So the bid-ask spread is just because of supply limitations is just higher.
Mm-hmm. It's higher, exactly.
Yeah. Right. All right. So this is the gold story. I'm just going to go off topic for a second here. I just wanted to put, this is my let's do copper really quickly. And then I want to go to heating oil, because heating oil, I think, is the gauge of things to come. Here's copper really quickly here. And this idea that, global economies demand's not going to be there.
So, okay, I believe that what happened, China, particularly retail China, is a huge consumer of copper. I think at those highs, there was a little bit of a buyer strike. People balked, put off projects, saying the copper's too high. So for the short term, we found a spot where it got to the right level where people started to pull back. Then you throw in the fact that I think that the United States economy is slowing down. I don't think I'm alone in that either. I mean, the crude oil market seemed like it thinks so too. So then all of a sudden, copper falls back into this level, which I think is very important. What are those lows from, I don't know, a couple of weeks ago, right, up a little higher? Yeah, right around in there. See, to me, I think that this is the level, because a series of highs, a series of lows, that's what, about 445?
4650, actually.
4650. I don't, my glasses, I should have stronger glasses on. Yeah.
I know. I'm at 2 inches in front of the screen. I can barely see it, but let's
getting old is great for you guys out there.
Oh, I know. So, I mean, would you agree that there's some downside here as well?
Sure. I think there could easily be downside. If we close below that rectangle, I probably will be trading around some of my core position, maybe put some puts on in the things I have. I did buy puts in silver near the top of my bigger position is copper, and I didn't buy puts in that. I'm kicking myself.
Okay. All right. So let's go to heating oil. Now, heating oil is really called ultra low sulfur diesel, which pretty much powers the supply chain and a lot of the manufacturing, right? Yeah. Diesel trucks, trains, planes, trains, automobiles, and then industrial processes. And so when I see this, I know it's going to follow. It's going to be correlated to crude oil. I get it, but still, when I see this kind of chart, it's like, okay, this is less demand.
Yeah, exactly. So it's got to be less demand, because again, it's something that's not probably as heavily traded as some of the other commodities. And of course, it's heavily traded. It's heating oil. It's not something in the back of the ledger, but it probably reflects demand, just like you think about it: crude, copper, heating oil, all the things that would be lower if demand was starting to crack. Demand's starting to crack. Remember, too, Fed policy over the last 2.5 years has been an attempt to make demand crack. I think they're probably getting what they wanted now. Yeah.
Well, I think this is the most underrated indicator of things going on. I'm going to keep track of this one, but let's go to crude. I'm doing this backwards, but let's go to crude. Yeah. And OPEC Plus just basically said, "Hey, we're throwing in the towel on $100 oil, but we want to get a bigger market share. So let's go ahead. Let's take out the frackers. Let's let this price go down."
Yeah, that's definitely the case too. And I think that that's the bigger driver of this. But secondarily, I think it is a commentary on the demand thing too. Can we get more data in this? Like,
Oh yeah, for sure.
Weekly?
I could do a weekly if you want. This is a weekly.
Okay, so you see where the obvious, if you are a crude bull, a fundamental crude bull, you see where the obvious spot to buy it is around that rectangle down there, which is what? Is that about 71?
Yeah, 71, 10, 20, something like that.
Yeah, so I also think that's a target right now too. And you don't just buy it blind, you don't just put it in. I would wait for it to pull back to there, to start to trade sideways, and then start to move higher. I would actually ultimately like it to go into the rectangle and then come out of it to the upside. You want to go to a shorter one, and we'll see if there's any short-term short.
Yeah, but one thing Dan Grams had taught me, which I wanted to point out, the first time we kind of hit that bottom of that rectangle, we had a series, we went sideways, right? Consolidation sideways. We had a series of big shadows at the bottom of these candles. This is a signal that there's demand there. Buyers, people are like, hey, this price is too good to be true. I want to buy here.
Yeah.
And so we'll see if that pattern repeats itself when we get back to the bottom there.
Right. That's what I mean too. We have to see if the buyers start to step in before. I'm not going to be the first buyer down there.
Right. Okay. All right. Well, I'm sorry, I cut you off. Where'd you want to go?
No, let's go to 60-minute real quick and see if there's anything on the short term that looks attractive to trade.
Okie dokie. Boom. Wow.
Wow is right. I don't know.
I mean, look at that.
Yeah, it's indecision everywhere. All these long wicks, it goes one way, comes back the other way. I guess I'd like to see it. If the next 60-minute took out those two high wicks of the last hour and 3 hours ago, I think that's probably a spot that it might be breaking out of that. It could retrace some of yesterday's move. And again, I think yesterday's move was the real move, but there could be a retrace, and you can play that thing back up to where it broke down from, or maybe even halfway where it broke down from.
Yeah. So what I would do, interested in what you think about this, I would just kind of take a snapshot and be like, all right, here's resistance right now. Just forget about supply and demand for a second. Here's resistance right now. And then here's support right now, very consolidated. And this has been quite a few 60-minute periods here.
Yes. And I'm not touching it until it breaks out of those. Like I said, I thought to the upside, maybe just because we had such a pronounced down move yesterday. And I thought maybe a retracement could be the more violent move is not the right way to say it, like a little bit more volatile move.
Right. So yeah, so right now in my mind is I'm still selling, and from a day trade point of view, my opinion is still, let's sell rallies.
Yeah, that's probably a good idea. I mean, I can't argue that. I know I just said that I'd buy it if it broke through there on a retracement, but I'd be quick with a stop.
Yeah, no, I'm talking like real quick in and out.
Yeah, I'm with you.
Let's go to Bitcoin. You mentioned Bitcoin earlier, and we do have a breakout. Let me go to the daily. Daily is better.
It's a beauty.
Yeah, we broke out of my hamburger bun.
Yeah, the hamburger bun has been broken out of, and and again, I didn't add to this only because I have quite a bit of Bitcoin, which is funny because everyone who follows me knows that I don't really actively trade Bitcoin. About 6 years ago, I just set up a program where I buy it. I believe it's every Wednesday. And it was small amounts, but then those small amounts turned into big amounts. So I didn't buy any more of this. I did buy Bitcoin when it broke out. Is that about 2 weeks ago, that green candle, when it broke out of the down move?
Yep.
Wait,
I'm sorry. Backward?
That one right here. I did buy Bitcoin when it broke out of that. And based on that same sort of theory, I should have when it broke out of this one because it's a very similar looking trade. But I did not, just because I was kind of filled up and looking at other things. But I like this.
And we're still early. If this pattern's going to repeat, from consolidation, breakout, we're still early in that pattern.
Sure. I think there's going to be plenty of opportunities to get in it from it. I think that worst mistake that traders make is to think once they see the breakout that they're looking for. By the way, when I say traders, I mean me as well, that you think, oh, I got to jump out an hour, I'm going to miss it. No, it's probably going to come back for you, kiss the breakout level, and then you can buy it again.
Yeah. So when I see so much green on the board, I think, is this a risk on day? Is that term even mean anything?
It does. And I think it does. Like yesterday, for most of the day was a risk off day. And I think some of the metals got dragged down with the stocks. And I know the stocks recovered toward the end of the day. When the stocks were on their lows, a lot of the metals, and then it doesn't necessarily, in my mind, matter what are the traditional risk on or risk off assets. I think if there are just and some trading desk has longs and a lot of different things, and all of a sudden we hit a risk off day, they have to sell a lot of their positions, even some of the ones that had been working. And I think that's why the ripple reverberated through the metals market as well, and everything got clobbered. And as we saw, gold's recovered. Bitcoin never got touched, by the way, which I think is amazing. Yeah.
Yeah, no, for sure. All right, so we have a minute left. Let's just go to 30-year Treasury bonds really quick. If I could pull this guy up, we do have a significant rally here, relatively speaking. I should add to that. Broke out of the triangle, took out this high back here at 1823 on the 16th, and this is looking like a committed move up.
It does to me as well. What I'd really like to see maybe is a little bit of weakness back to the levels near where it broke out from, and then continue higher again. Because right now it's hard to buy something that has just had 3 straight rocket ship candles in a row. That's tough for me to buy it. So I need for it to come down a little bit. I do think in the short term, rates could go to, where did you say they were right now? About 4.3?
For the 10-year? The 10-year micro yield, 4.291. Yeah, a little under 4.3.
So I think 4.25 is perfectly reasonable even on the short term, even today or tomorrow. I think it might have a difficult time going to 4%. And I think ultimately, once we start to get at auction season again, it's going to be harder for lower rates to persist. So I don't love being, I'm actually short, along a steepener. So I'm short 2-year yields and long 10-year yields, thinking that the curve is going to steepen again, but it didn't today. It's going against. But I think that's the play still, because I think eventually soon, we're starting to pull more rate cuts in. 2 now. We had 1 just a couple of short days ago, and now 2 by the end of the year. And I think the problem with the Treasury issuing bonds is not over.
So I got another question. Sorry. The yields you just mentioned, the inversion between the 2 and 10, playing that. What's the correlation? Let's say the GDP now forecast keeps going down towards 0. Will we then expect this yield curve to become normal?
Yes. So in the past, when it's happened is that, it gets inverted and it doesn't normalize until things start to break, because that's when the Fed has to really get aggressive, and they don't have to there's no more shrouding it, and there's no more concern of politics or not politics. They have to move, and they have to move quickly. And when they do that, they usually don't mess around with adjusting quantitative tightening or easing. They just go right to the Fed funds rate and lop off 25 or 50 on that rate. And that could steepen the curve out quickly. So when that happens, I actually, the right trade would be a steepener that accelerates, because the moves to steepening is going to be way more violent than a potential move to greater flattening or more inversion.
Mm-hmm.
So there's probably an options play, which I don't have in my head right now, about how to structure it so that if it grinds more inverted, fine, you lose a little. But if it steepens, and it steepens really quickly, that's where you'll make your money. And there's an options play for that I'll figure out.
Awesome. Well, I can't wait. Once you figure it out, let me know, and we'll get everybody in on it. But appreciate your time today. The new time. Sorry about that, but I appreciate it.
I love the new time. It's great.
All right. Awesome, man. All right. Well, listen, have a great day. We will talk to you soon.
Thank you.
All right, everybody. Thanks for coming. Great session today. NinjaTrader Live. Appreciate everybody being here. I do want to remind everybody, most important message of the day, please be safe out there. Be good to each other. We'll see you soon.
All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader LLC. Trading futures involve substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.